I'd like to call the meeting to order and welcome everyone in attendance. The committee has under consideration the estimates of the Ministry of Treasury Board and Finance for the fiscal year ending March 31st, 2026. I'd like to go around the table and have members introduce themselves. For the record, Minister, please introduce your officials who are joining at the table. My name is Garth Roseau, MLA for Vermilion, Lloydminster, Wainwright, and Chair of the committee. I'll start to my right. Kenny, introduce yourself.
Oh, sorry. Tanny Out, Fort McMurray, Buffalo.
Nolan Dick, MLA for the amazing constituency of Grand Prairie.
Eric Bouchard from the amazing constituency of Calgary-Lougheed.
I won't try to top that. Good afternoon, MLA Jennifer Johnson, Lacombe-Panoka.
Nate Horner, MLA for Drumheller Stettler. Joining me at the table, I have Paul LeBain to my far left, Assistant Deputy Minister of Economics and Fiscal Policy. To my immediate left, Dana Hogeman, Senior Assistant Deputy Minister of Treasury Board Secretariat. To my right, Kate White, Deputy Minister of Treasury Board and Finance. And to my far right, Mark Kleefeld, Assistant Deputy Minister, Senior Financial Officer for Treasury Board and Finance.
Sharif Haji, the MLA for the incredible Edmonton decor.
Court Ellingson, the MLA for Calgary Foothills. I'm very familiar with Grand Prairie. It's lovely, but it doesn't hold a candle to Calgary Foothills. And the Shadow Minister for Finance.
Jody Calhoun Stonehouse, Edmonton Rutherford.
Nathan Epp, MLA for Edmonton Southwest.
Samir Kayanda, Calgary Elbow.
Thank you. I'd like to note the following substitutions for the record. Mr. Bouchard for Honorable Ms. Armstrong-Hominick, Mr. Ellenson for Ms. L. Junaid, Ms. Johnson for Honorable Mr. Hunter for a portion of the meeting, Mr. McDougall for Mr. Boychenko for a portion of the meeting, and Mr. Epp for Ms. Sweet as acting deputy chair. A few housekeeping items to address before we return to the business at hand. Please note that the microphones are operated by Hansard staff. Committee proceedings are live streamed on the internet and broadcast on Assembly TV. The audio and video stream transcripts of meetings can be accessed via the Legislative Assembly website. Please set your cell phones and other devices to silence for the duration of the meeting. Honorable members, the main estimates for the Ministry of Treasury Board and Finance shall be considered for 6 hours. For the record, I would note that the Standing Committee of Resource Stewardship has already been completed 3 hours of debate in this respect. As we enter our 4th hour of debate, I will remind everyone that the speaking rotation for these meetings is provided for under Standing Order 59.01 subset 6, and we are now at the point in the rotation where speaking times are limited to a maximum of 5 minutes for both the member and the ministry. These speaking times may be combined for a maximum of 10 minutes. Please remember to advise the chair at the beginning of your rotation if you wish to combine your time with the minister. With the concurrence of the committee, I will call a 5-minute break near the midpoint of the meeting. However, the 3-hour clock will continue to run. Does anyone oppose having a break? Okay. When we adjourned this morning, we were 5.5 minutes into an exchange between Member Boychenko and the minister. And I note that he's not here and his sub isn't here, so we will start on your side for a 10-minute combined time. Did you still want to share time, Minister? Or?
Yes, it was.
Okay, carry on.
Well, thank you, Minister, and thanks to the department team. I can only say it is the most busiest time of your time, and thanks for all the work that you put into the whole budget process. As a former public servant in such a role, I can understand how much time that it can take, so thank you. Through the chair, I was looking into the business plan on Objective 2.4, which is page 182, shows that the ministry aims to ensure Betta's insurance market remains stable, accessible, and affordable. However, why affordability is not being measured in the metrics of the outcome and the objective, how is the stability of auto insurance is assessed? I'll come back for the affordability, but how do you assess the stability of the market?
Oh, well, it's a great question. The market's definitely having its challenges. Definitely seen cost escalation on the vehicle repair side, inflation. We're also seeing, increase in personal injury claims. So we've started down the path of pursuing a system change, which is complicated and will take time, but it's meant to address the affordability concern, I'd say first and foremost, while providing more prompt care. But it'll be a heavy lift for the department and team. This is quite a undertaking. We're hoping to roll it out January 1 of 2027. And it'll take a lot of work to land that successfully. The market, we brought in the 7.5% cap. We increased the cap. We hear consistently from insurers that that's not enough, that's not covering their costs, and that's leading to challenges in the landscape. But we've said we'll work with them as we land this plane and hopefully land in a more affordable structure for all Albertans. But I don't want anyone to think that it's not going to be challenging and that the pressures aren't still there. We have seen some insurers choose to leave. That is real. Others have let us know that they'll still have a hard decision to make with their boards. And others are willing to take the losses and put their faith in us to change the system and then be there to offer a new product and pick up from there.
The struggle I have is before even we change the insurance system and overhaul, there are, based on conversations that we had with stakeholders, there are some insurance companies leaving the province. But your metric shows that 100% stable is your target. So I'm struggling in terms of understanding how do you have 100% target throughout when you are in such a situation?
Well, I think the way I would view that is you wouldn't need all of them to have 100% availability. The availability and what they offer to whom may change. Some unfortunately were further behind in their, asks of the rate board for increased rate. They're in an unfortunate situation since the caps came in. But I think the goal is around availability, and I think that's how we're viewing what a stable marketplace is. We're confident that there will be a home, a place for everyone to go for insurance once we land this plane.
So basically, the metric measures the availability of insurance companies in the province.
The availability to the consumer, I would frame it that way.
But we are not able to measure in terms of stability, given that we're going to make a major change in the system.
It's very tough to measure the metrics while you're in the middle of a change, but we're going to keep our threshold cap limits in place to provide that affordability in the short term, get to the end goal, and
consider it.
Could we consider what?
Have we considered in terms of measuring of stability?
Well, I think the point is we needed to make the change to get to where we could talk about the stability outcome and metric. It's obviously a challenge in the transition period, but that's the goal. That's what we're trying to measure.
Okay, given the affordability challenge that we face, instability in the auto insurance sector as well, do you think that we need to jig and change this measure that we have at the Business Plus? Because of this is what we have had.
Well, I think it will all be reviewed with the new system, so potentially, that was one thing that became very evident out of the consultation and the summit that day, was that availability was something that we left out of the consideration. And so that is the goal right now, to ensure that as we're seeking to make things more affordable, that it exists for everyone.
Thank you. According to page 56 of the fiscal plan, the revenues from automobile insurance has increased by 66 million. I understand the rise is from the premium rates that led to the increase of insurance premium tax revenue. Why is the government not adjusting the tax rate to be revenue neutral, especially when Albertans are facing affordability challenges when it comes to auto insurance relative to the rest of the country?
Well, we looked at it through part of our process, but I would say take this as a measure of, balance that we're trying to apply to all things. We didn't raise it either, considering we're running a $5.2 billion deficit. So I think that, showed our appreciation and effort to try to not exacerbate this problem. But yeah, no decision was made to lower it.
Yeah, I appreciate that it wasn't raised, but I also want to underscore that we have higher premiums compared to the other competitive or comparable provinces. And also seeing that we have an increased revenue compared to the previous year would have triggered saying that this is a way of providing a relief to Albertans in terms of the auto insurance costs that they have to pay on their monthly premiums.
Well, I'd just say you have to look at everything holistically. It's volume that's driven the revenue increase. 200,000 new Albertans largely. The deficit, no path to balance yet. Hard decisions coming. I appreciate the concerns around affordability. That's why we brought in the income tax cut. We've tried to protect people with the good driver rate cap, even though it's causing maybe more challenges behind the curtain, so to speak. But we're trying to balance those needs of Albertans while we get to January 1.
Okay, and on page 153 on the fiscal plan, the motor vehicle accident claims fee is set to double from 6 to 12. Why is this increase happening at the time when vehicle-related costs are contributing to the affordability crisis?
Just bear with us. We have
While on that, how much is the premium tax component? What's the percentage?
lots of binders, lots of paper. It was so it was from $6 to $12 per annual motor vehicle registration.
So the question is why did it go to double?
Fees for the MVAC program have remained unchanged since 1986 and have not kept up with the increase in total claimants and the higher average cost to settle claims. The MVAC program covers 100% of Albertans, pedestrians, cyclists, and minors, not only those with an auto insurance policy. The MVAC program ensures victims injured by uninsured or unknown drivers have a place where they can receive payment for their personal injuries.
So it was a compounded increase, basically, that has not been increased for many years.
Largely 1986. That was most of the fee increases that we adjusted had been 30 years without being adjusted.
Yeah, did we consider doing that on multiple years instead of 1 year?
Thank you very much. Back to that next block. So we'll go to the government side, and Member Dick, go ahead, 10 minutes.
Excellent. Well, thank you so very much. Thanks for coming back again this afternoon. It's so great to see you guys back here. Same here. So I got a question on the Public Service Commission. It's online. It's line item 9 on page on page 242 of the government estimates. So it's getting a small increase this year. With that increase and just generally, what can you tell us about the work the PSC does and will be doing into the 2025-2026 reporting period?
No, thank you for the question. Glad that I have them sitting behind me if I need any help here. Yeah, the Public Service Commission's budget for 25-26 is proposed to remain the same as last year at $71.1 million. The Public Service Commission is the central human resource department for the Alberta Public Service and is responsible for providing HR services to all 27 government departments and more than 29,000 employees, enabling them to effectively implement the mandate and goals of government. The Public Service Commission is established through the Public Service Act and is responsible for delivering client-centered HR services, including employee relations, recruitment, workforce planning, and organization effectiveness, leading HR policy, planning and programs, including occupational health and safety, compensation and classification services, pension and benefits, and HR data governance and analytics, representing the GOA as the employer in collective bargaining, and leading labor relations across departments. Coordinating learning, development, and talent management for the GOA, as well as communications and engagement strategies, and collaborating with departments and public agencies to promote a consistent approach to agency governance and recruitment.
Excellent. Well, thank you for that, Minister. Now, out of that, either money or extra money, does the Public Service Commission plan to spend any money in this next reporting period on DEI initiatives at all?
It's important to note that the Alberta Public Service has never had, I guess, the E in DEI, an equity policy. The Public Service does have a diversity and inclusion policy statement, which says the Government of Alberta is committed to a diverse public service workforce that reflects the qualities and differences of the broader population it serves. The Government of Alberta is equally committed to an inclusive workplace that welcomes, respects, and values the diversity of employees and supports them to actively engage in the workplace and achieve their full potential. The Public Service will work toward a barrier-free workplace and support and foster a diversity of perspectives with the aim of providing programs and services to meet the diverse needs of Albertans. This policy statement has been in place since 2017 and reinforces the APS's commitment to having a public service workforce that reflects the qualities and experience of the broader population it serves, and to fostering an engaging workplace so that employees can provide high-quality service to Albertans. This statement's focus is grounded in employee engagement and ensuring the APS continues to have a positive workplace culture. The Public Service Commission does not have any dedicated funding for diversity and inclusion initiatives. There are a number of optional trainings that are offered in the APS that touch on diversity and inclusion related themes, such as the Indigenous Cultural Protocol training and Working Together Disability Awareness. These courses are not mandatory, but are offered as part of the broader professional development framework in the public service, and there's no funding allocated for these courses.
Excellent there. Thank you. Thank you for the explanation and just the clarity on that, Minister. Really appreciate it. I'm gonna just jump over to the revenue here of government. I do have a question just on the investment income. I see it's on page 229 of the government estimates under the revenue section. So it's kind of a two-part question. What's included in the investment income? But there's significant difference between what was budgeted and what the forecast amount, according to my math, just under $2 billion on investment income. And then in our estimates, we see a slight decrease in the budget. So can you explain why why we see our investment income going slightly down, roughly just under 300 million, I believe. But then also we had this giant windfall of almost $2 billion on the actual forecasted amount of what we are receiving on the revenue. So a couple questions there. Just wondering if you can walk me through our investment income.
The decline in investment income compared to last year's results reflects changes in market conditions, including generally lower yields on money market and fixed income instruments, which most significantly impact the Heritage Fund and government endowment investment performance. For example, as of the latest fiscal quarter end, the Heritage Fund, which is now worth $25 billion, had fixed income and inflation-sensitive asset exposures equal to more than 50% of the investment portfolio. While this allocation does help balance portfolio risk while dampening return volatility, it is impacted by fluctuations in underlying interest rates. Government remains committed to prudent investment management of the Heritage Fund and endowment assets. Other liquidity, cash, and near-cash accounts continue to be managed to prioritize the full safety of capital. So it's one of the things that will be addressed when we're talking about asset allocation for the Heritage Fund. I don't want to suppose what the Heritage Fund Opportunities Corp will provide as far as the statement of investment priority and goals for the fund, but I'm quite confident it won't have a 30 to 40% allocation to fixed income. That's one of the changes by leaving the retained earnings in, having a more patient expectation and timeline. We would expect that the allocation will change.
Excellent. I'm seeing some of your staff nod their heads in the back, so I think you nailed that one. So I got time, I think, for one or two more questions here. Jumping back to page 242 of the estimates. It's line item 701. The budget for the fiscal section regulation and policy will be increased by 9.5 million overall. Can you explain what the the financial sector regulation and policy entails, and give us some insight as to why the overall increase of 9.5 million overall going forward? This is a significant increase on that budget line. I just want to know, is it coming in from somewhere else? I think by my math, it's about double, just over double on that one line. That's a lot of increase, and so I'm just curious where that extra cash is going.
Well, it's the insurance undertaking, but I'll try to give you a more thorough explanation and answer the first part of your question. Financial sector regulation and policy provides policy and regulatory support and analysis to the minister on insurance. That's including consumer protection, pensions, and financial institutions. The division also regulates and supervises registered pension plans, insurance companies, and provincially regulated financial institutions through the superintendents of pensions, insurance, and financial institutions and respective branches, working closely with regulatory and administrative agencies such as the Alberta Insurance Council, Automobile Insurance Rate Board, Alberta Pension Services Corporation, Alberta Teachers Retirement Fund, and the Credit Union Deposit Guarantee Corporation. The division is responsible for ensuring legislation, regulation, and policy meet current and emerging needs. FSRP also leads the regulatory sandbox and financial services concierge for Alberta's financial services and financial tech sector. The increase in FSRP's budget, as identified by the member, will be utilized to help support policy development and implementation of the new Care First auto insurance model. This amount includes $8 million for support for external contractors in areas of experience that the division does not currently retain, such as actuarial analysis, injury treatment protocols, and medical assessment, project management, advertising, and external legal support. Additional amounts of $1.5 million will be used to fund up to 13 temporary staff within the unit to support the implementation of the project.
Awesome. No, I really appreciate that, Minister. Our auto development and those policies, those are pretty significant, and so thanks for you and your team for taking that. Those are. I'm very hopeful of that we can see some significant decreases for people across Alberta. So thank you for that.
Thank you very much. Go over the opposition side. Member Haji, go ahead.
Yes, if you could go back to the prior question around why did we not consider the increase over time instead of one time.
You're assuming it's one time.
Yeah, because of it's a jump that you said that it's because
Yeah.
of you have not increased from that. It's not an assumption. It's just based on what you said.
Well, I'm just saying it'll have to be, constantly monitored. We could have brought it in slower. We could have went higher. It may have to go up again. I don't, presuppose any of those things. That's where we're headed.
Okay. Similarly, on page 70 of the fiscal plan allocates additional $7 million for motor vehicle accident claims related to uninsured or unknown drivers. And through the chair, can the minister explain the reason for this significant increase.
What's the page, sorry? Ken?
Page 70 of the fiscal plan.
Okay. The answer is there's more injured, but I'll just see if there's. It's the 24-25 forecasted amount,
Yeah.
yeah. More injured, yeah, I don't have much more data than that. Higher volumes and medical costs for motor vehicle accident claims from victims of uninsured or unknown drivers. You're asking what's the driver
Yeah,
behind
the driver
scenes?
of it.
Population growth, I'd have to dig in, costs going up.
Will you be able to provide some of that background information?
If we have it,
Yeah.
I'm sure we can, but I should just say the MVAC will look different and change with the system change as well.
I just want to clarify between two. If it's a population increase, understandable. But as you said, if there is an increased injuries, then that will be, we should all be worried about that.
So the increase is primarily due to the continued increase in the number of applicants entering the program, along with the average medical claim cost. So average cost increasing, resulting in higher injury claims expense. In addition, the increase is due to an additional resource to address the resulting caseload growth in the program. So that's the budget.
Okay. Insurance company profitability and the tax revenue is something that will have an implication when it comes to the new model, and of course I understand it's not still there, but my question would be that if over the next 2 years the new auto insurance model is implemented, how much additional profit margin is the government considering for insurance companies? And again, I'm tying it back to the stability.
Just a second.
I can come back to that and then jump into another question so that I don't lose time.
We're gonna have more to say next week. I don't think anything's changed. It's currently 6% at the rate board. We lowered it from 7. I haven't been in any conversations where I understand that's changing. I'm just wanna see what, my deputy minister hands me here. If you'll indulge me, Chris, do you wanna answer this?
There? Okay, thank you. I'm Chris Merriman. I'm the Assistant Deputy Minister of Financial Sector Regulation and Policy, as well as the Superintendent of Insurance. Thank you for the member, or thank you, member, for the question. So right now, the profit margin is one of the things that's being considered under the new Care First model. But at this point, I can't really speak to what the changes are in that because I could be breaching cabinet privilege, and you can imagine that would probably get me in trouble. But the minister indicated that he hadn't been in any discussions as to that. There's a lot of additional questions that are still needed to be addressed beyond what we've already got approval for at this point. So that would be potentially one of them.
Yeah, well, thanks. Thank you, Chris. Okay. I look forward into what that margin could be, and thank you. Back to again, on the fiscal plan, page 145, it projects an increase of 71 million and 77 million in the subsequent 2 years. I'm wondering what this increase will account for in the new insurance model.
What page and line are you looking at?
It's fiscal plan, page 145. And if you look at top of my, I think it is under insurance tax revenues. These ones.
So he's looking under, oh,
Percentage.
Yeah, just,
This is the expense, this is the premiums tax.
Under
So-
other taxes, insurance taxes.
yeah, it's purely based on volume.
Yeah, but
Same Italian.
does this take into consideration with the new model? Because of it's a forecast that I'm looking into
This is a forecast of the current.
It's a forecast, this is a forecast of the current model.
of the current model.
Yeah.
Doesn't reflect the new model. So this may not be the numbers that we'll be talking in the future.
Current legislated model, we can't model on things that don't exist yet.
Okay. I will go into my on page 182 of the business plan. The ministry outlined its intent to use the regulatory sandbox to support financial innovation, including implementing halal financing option. I understand that the ATB and credit union set to launch their first halal finance products this summer. Additionally, the government has been in negotiation with investors from out of the country. So before I talk about the investors, with the launch of the halal financing through ATB and credit union, will there be any financial implication on
Not
budget
for the-
25?
Not for the government. no.
Okay. The government has been in negotiation with investors from Kuwait. Can the minister confirm whether these investments have been incorporated into the fiscal outlook?
Yeah, I'm not aware what you're referring to.
Okay. Let me go to on page 178 of the business plan. We see that Treasury Board and Risk Management provides policy support and analysis for ATB Financial. According to the ATB website, the mandate of ATB is to provide financial services financial services for Albertans. So what are they learning from the review that has been completed, and what changes are being considered with ATB mandate?
Well, I think the big change that has happened to their mandate would be around the dividend piece in my time here. And thanks for ATB's cooperation as we achieve that. But 25 million per quarter, 100 million a year for the GOA. First dividend that has been paid back of that kind for the asset owner, which is Albertans and the GOA. But I do have Dan Hugo here. If you want to come to the mic, Dan, and speak about ATBs.
Yeah, we'll come back later. Thanks, Dan. Appreciate it.
Thank you very much. Our next on the government side is Member Bouchard. Oh, before that, Member Wojchenko, if you could introduce yourself for the record.
Andrew Bochenko, MLA for Drayton Valley, Devon.
Okay, Member Bouchard, you have 10 minutes. Go ahead.
Thank you, Chair. Thank you, Minister. On page 249 of the government estimates, under the item labeled Other Revenue, it looks like the ministry is expecting to see an additional $6 million over the 2025-26 reporting period compared to the 2024 to 25 estimate. What exactly constitutes as other revenue, and how is this estimation for the 25-26 reporting period decided?
Okay, thanks for the question. Other revenue primarily consists of other miscellaneous revenue, sources that partially come from services provided to other agencies from the department, and administrative and penalty revenue from the Alberta Securities Commission. The $6 million increase is related to the Alberta Pension Services Corporation. The $6 million growth in APSC is from continued membership growth, currently 4% from prior year, and new participating employers. Services are also expected to increase, and administering the various plans is becoming more complex. Alberta Pension Services Corporation guides the pension experience on behalf of Alberta's public sector pension plans. APS was incorporated in 1995 under Alberta's Business Corporations Act with the Government of Alberta as the sole shareholder. Services would include contributions management, member, pensioner, and employer information management, member, pensioner, and employer communications, benefit calculations and disbursements, plan board services, policy development and implementation, communications design and delivery, compliance, regulatory, and plan financial reporting.
Excellent. I think you you touched on it a little bit. How will this revenue from the other revenue sources be used to ensure a brighter future for all Albertans?
Well, I hope any revenue the government receives is put towards a brighter future for all Albertans. I'm pretty confident it has been, and that's what this budget represents. But yeah, budget 25. You know, we're delivering on our income tax cut for the 8% bracket. You know, big investments in health, mental health and addiction, 1.8 for mental health and addiction, 4.4 for assisted living, Alberta under SCSS, 10.4 billion in total program expense in education, funding for enrollment growth, adjusting the funding formula for school boards, provides support for students with specialized needs and addresses classroom complexity. The capital plan is huge, 26.1 billion. That's a $1.1 billion increase. A big chunk of that is for municipal infrastructure support, $7.5 billion. 3.8 billion for capital maintenance and renewal. That has to come up too. Even though you're building more, we have to maintain what we have. 3.6 billion for health, mental health and addiction and continuing care, 2.6 billion for schools, 2.5 billion for roads and bridges, and 6.1 billion for other capital planned envelopes, such as the such sector self-finance capital spending. So I hope you can see it's all being, pushed towards a better life for Albertans now and tomorrow.
Appreciate that. Thank you. I'll stick with page 249 of the government estimates. Under the expense labeled Financial Sector and Pensions, I see the ministry is expecting to spend $232 million on this item over the 25-26 reporting period, which is an increase of $26 million from last year's estimate. Now, can you explain what the finances for financial sector and pension entails from the ministry? And please expand on why this expense is increasing to $26 million over the 25-26 reporting period.
Okay, thank you, member. The financial sector and pensions line within our ministry's statement of operations is comprised of department voted spending, including the financial sector and pensions division and the ARB, or the Automobile Insurance Rate Board. The line also includes statutory spending related to pension liability funding expense of the government's portion of several public sector pension plans pre-1992 unfunded liabilities as per the public sector pension reform legislation in 1993. These include the closed management pension plan, the university's academic pension plan, the special forces plan, and the MLA pension plan. In addition, this line includes spending for the Alberta Insurance Council, Alberta Pension Services Corporation, and Alberta Securities Commission. The increase is primarily due to funding to support the mandate item of automobile insurance reform for additional resources and costs to support public education and other program costs. These costs result in no net increase to government's bottom line, as all regulatory costs are recovered from industry. In addition, higher ASC and APS spending is reflected as a result of additional resources, merit increases, and increase in benefit costs. The increases in APS are recovered from its clients. Yeah. I don't know if you heard me gulp when I read MLA pension plan. Why, yeah, it's just for Albertans watching. That's all old.
No comment. Thank you, Minister. On page 183 of the Ministry Business Plan, under Outcome 3, we can see that the Ministry of Treasury Board and Finance is dedicated to keeping an efficient and effective public service which works for its citizens. This is supported by a $71.1 million allocation to the Public Service Commission to support the development and delivery of strategic HR policy. Can you explain to this committee how the $71.1 million allocation was decided upon for the 25-26 reporting period?
Yes, thank you, member. So the Public Service Commission is established under the Public Service Act and is responsible for providing human resource services for all 27 government departments. Much like the rest of Treasury Board and Finance, the PSC exists to provide services to the rest of the government of Alberta, ensuring that departments are able to effectively deliver on the government's mandate and provide much-needed services to Albertans. A few things the PSC is responsible for: delivering client-centered HR services, which includes employee relations, recruitment, workforce planning, and organizational effectiveness; leading HR policy planning and programs, including occupational health and safety, compensation and classification services, pension and benefits, and HR data governance and analytics; coordination of learning and development and talent management for the APS, including internal employee communication and engagement strategies; collaborating with departments and public agencies to promote a consistent approach to agency governance and recruitment through the Public Agency Secretariat. Of the department's $71.1 million budget, over 94% of that is dedicated to salaries and benefits associated with the PSC's 603 full-time equivalents. The remaining 6% of the funding is for a small number of contracts for things such as professional and legal services, the delivery of employee training and medical consulting associated with the disability services and the long-term disability income continuance plan. It is also important to note the number of FTEs in the PSC compared to the number of FTEs in in the Alberta Public Service in Budget 2025. If you want to look at the closest comparators, we usually use Ontario West. Alberta's continued to serve the highest number of employees per HR person. This is based on 23-24 data. British Columbia was 1 to 43, Saskatchewan 1 to 40, Manitoba was 1 to 36, Ontario was 1 to 34, and the APS was 1 per 49, to give you a bit of a reference point.
Thanks, Minister. You answered my next question before me having to ask it.
Oh, good.
So I'll move on to the next one, I suppose. On page 182 of the Ministry Business Plan, under the Key Objective 2.2, we see that the Ministry of Treasury Board and Finance is positioning to work cooperatively with other jurisdictions to improve security regulations in Canada, improve access to capital, ensure a provincially led regulatory system that meets the needs of Alberta market participants and investors. I'd like to ask about this objective to the Ministry and then to the Minister through the Chair.
We'll stop there and maybe come back to it. Member Kayande, you have 10 minutes. Go ahead.
Okay. Thank you, Mr. Chair. And through you, thank you to the Minister for making yourself available. It must be a very grueling day.
It's a long one.
Yeah. I wish I could say I'm going to take it easier on you, but My first question is about property tax, and of course, being the MLA for Calgary Elbow, but my instinct is that Elbow is going to be disproportionately impacted by the property tax changes. They disproportionately, the provincial component of the property tax affects Calgary more than the rest of the province, and I suspect that within Calgary, it is Elbow that is going to be taking a fair bit of the brunt of this. Do you have any, and this is a very specific question, so if you need like people to work on it, they can do that, I think. But say for a hypothetical family in Altadore with a $900,000 house, how much extra property tax would they pay?
You can definitely calculate it. I can guess in my head, but
Are we doing a pool?
But yeah, I don't think anything you said there would be inaccurate. I'm aware of the, the communities in Elbow. I think that's a likely outcome.
Okay. And then secondly, and I don't know if this came up this morning, but if you think about the 8% tax bracket, like if we think about somebody making, I don't know, $120,000 a year, and if we include, if we say that they're like a single income earner, 2 children, spouse who doesn't work outside of the home, how does the effect of the cascading exemptions, because exemptions I believe are calculated at a lower tax rate as well, and so does that $750 that you're estimating per ratepayer, is a portion of that given back for children and non-working spouse?
So we did our best to bring in some bolt-on amendments to ensure that nobody was made worse off through the tax change. Single income people with a disabled kid that have a lot of tax credits, to make sure we made up for the rate on the credits being lowered as well. So we've tried to cover those bases so that no one was made worse off. If you want a specific number for a scenario, we could try to do that here, I guess.
You don't need to do it here. I mean, you can come back later, but I tried to do it myself, and it's hard.
Okay. Well, what is the parameters you're asking?
Let's call it a single income, $120,000 a year, non-working spouse, 2 kids under 18 living at home.
Single income, 2 kids, non-working spouse.
Non-working
You guys got
spouse,
that?
yeah.
Okay. We'll figure that out.
All right, thank you very much.
Note on that, if you don't calculate it out in these 3 hours, you'll have to submit that to the chamber.
Okay. Well, I'll do that one for you, Mr. Candidate, but I said earlier, I don't want to make homework for these guys, so we'll try.
Okay, thank you. Thank you, I very deeply appreciate that. Moving on to the Heritage Fund. So the, and I believe this is in the business plan, but the Heritage Fund has options of where to invest. What do you think thematically about, because we are a very oil and gas linked province when it comes to our revenue, if your stated intention of the Heritage Fund is to help us get off the roller coaster, then how does that dovetail with an investment strategy that, that doesn't preclude investing in energy or in Alberta? Like, can you talk about that a little bit?
Yeah, I think the way I picture it, and I hope this answers your question, is it's going to give the government in 2050 the optionality if there's less bitumen royalties, if oil and gas has gone a different way, that you'll be able to use a portion of the retained income in a given year. We've looked at numbers like potentially $10 billion a year by 2050 that could come off and still allow the fund to grow. I think when you're talking themes around investment, obviously oil and gas is very lucrative to the province. It's our asset. It's our royalty. Mm-hmm. So I think you want to make sure that you foster that as best you can through markets and egress and technology, trading partners. So I think that will always be a part of it, but I also think that there's a lot of other emerging themes that are potentially also very lucrative in that space. I'd say, not coming from that world, and I know that you do, Samir, I kind of went through that process having to be convinced that this was that this was possible. And so thank the team for the doors they've opened to me to have conversations and try to convince me. But I think thematically for the province, you know, everything from water to, you know, technology, electrification, and everything that comes with electrification, from, you know, storage to safety and fire to, you know, space. It's telecommunications. There's so much that's changing so fast. I think as long as we have the right people in place to handle those themes, and I think the themes really help with like the ancillary potential benefits. Like maybe they invest with some people that maybe they do a project elsewhere in the globe, but they get awareness for what Alberta has to offer, and it spins off that way, if that makes sense.
Thank you. Thank you very much, Mister. On page 145, I believe this is the fiscal plan.
Digging up, Samir, I do have an answer to your question. 8% tax bracket for a single income household with $120,000 in income. The tax savings would be $195.
Oh, great. Thank you so much.
Yeah. Thank you, guys.
Really appreciate that. Heritage Fund returns are projected at about 4.5% throughout the forecast horizon. And it looks as though you need nearly 10% a year in order to get to the $250 billion number. And so when are the two going to match up, or why don't they match up?
It's a 9% expectation if you kind of work it backwards from the 250. I think we would point to the fact that, you know, by doing 7 or a little over 7 with a really antiquated asset allocation that all of the Heritage Fund assets currently have, that we think that leaves a lot of, you know, substantial room to make that possible. Like I answered in a previous question, I think fixed income's at 30 to 40% on the current allocation.
Why not model that into the expectation that you're putting into the budget then? Because the 4.5% is next year, this year, next year, and the year after. It looks like it's around 4.5. So every year that you don't meet that 9.5, depends on how you round, I guess. My trusty HP12C tells me you need 10.65 starting in 3 years if you want to start hitting $270 billion at that point.
So what's the question, Samir?
So why do you show only a 4.5% return in the budget documents for the Heritage Savings and Trust Fund for the next 3 years?
Short term versus long term. I don't know how more I can explain it.
But that means you're running out of time, right? Like that's the problem. Like if you started today and got 9% rate of return, you'd hit 250 billion. But if you're starting 3 years from now, then the rate of return must necessarily go up.
Yeah, it's an average over time, so we're expecting there'll be lots of years when it's higher than that as well.
Okay,
so we need a little time. The asset allocation hasn't even changed yet.
Okay, so it's fair to say then that if we think about the budget as being the truth, then we're really looking at something around 10.5% required rate of return starting in 3 years in order to hit the plan. Is that correct?
Well, 9%'s the number that I've been told. But
average from now, but you're giving up because you got 4.5, 4.5, 4.5, and then some other number. And that other number has to be around 10.5, according to my calculations.
Yeah, well, like I said, it is an average. So I guess if you're taking into account the short-term lower number, I guess that shows our expectation for a higher number in more years, right?
Thank you very much. Really appreciate that, Minister. Yeah.
All right, we'll go over to the government side again. Member Johnson, go ahead. You have 10 minutes.
Thank you so much, Mr. Chair, and thank you through you to the minister and to all of your staff who have done so much work in the past year and preparing for this. Really appreciate that and having you be here today to answer all of these questions. I'm going to start with debt servicing, and I know as a manager of a home even that it's really important to control what goes in and out. And if you don't pay your credit card every month, you've got interest to pay, and that's no different with the government. And so it looks like we've got $3 billion plus in debt servicing costs. And I remember the Minister for Transportation talking about this in the chamber and saying that our debt servicing costs really are equal to his entire ministry. So imagine if we didn't have any debt servicing costs, we could double the scope of what he is doing. We could have so many more roads paved, we could repair so many more bridges, and we could do it very, very quickly. Or in another way, we could be building a new school every month with those debt servicing costs. So this is really important. And I see on page 249 under the expenses that our debt servicing costs are expected to drop this year. Well, I think this is really good news. And this is despite the fact that there is a deficit. So through the chair to the minister, can you tell us why the debt servicing costs are falling going into the 2025 and 26 reporting period, and maybe why this trend has, what the trend has been in debt servicing costs over time?
Sure. No, thank you for the question. So the reduction in debt servicing costs this fiscal year is mainly attributable to favorable market conditions, including lower short-term borrowing rates and intermittent cash surpluses, which has allowed for strategic timing of borrowings. A significant portion of the borrowing contemplated in Budget 2024 was secured during the year at more favorable rates than was originally forecast. We are anticipating an increase in the debt balance by the end of the current fiscal year, primarily due to the partial pre-funding of term debt maturities scheduled for 25-26. And I know my debt guy isn't with us today, but throughout this year, we knew that we had a large debt stack maturing in first quarter 2025. So the plan was we would try to smooth that out and borrow throughout the year in preparation of that. Some might ask if are you at risk of interest rates changing or the like, but it's a prudent path to ensure that we get in a way that the capital markets like to see. We're coming to the market often, adding liquidity to our bond offerings, and I think it's been well served. That's a number that Alberta's never had to wrestle with before. There's a combination of 10-year debt from 2015, it's some short-term COVID debt, but a stack that we've never seen before. So the team's done a phenomenal job, trying to add liquidity to Alberta's bond curve, which the markets greatly appreciate. Really interesting for me to understand that although we have the best balance sheet by far across the country, often we trade back of a province like Ontario, which is kind of wild. They're the most indebted sub-sovereign in the world, but because Alberta would come to the markets in kind of a ad hoc way, we would borrow when we needed to, then we would, we'd have some good years, we wouldn't be in the market at all for a few years. So they would really punish us on the rates that we pay. So we're trying to, do this prudently and get a better deal while we're borrowing. I think the debt servicing number is 2.9 for this year, if memory serves. But it, combination of a cash surplus that we weren't expecting at budget 2024. The fiscal year we're still in improved dramatically. So that meant, not only were we able to we'll be able to retire some debt at the end of this fiscal year, but also just the debt avoidance we were able to come into is huge. I would also just say super important for Albertans to understand, if you're going to save in the Heritage Fund, very important for us to really be thinking about our net financial position. So debt's obviously still very important and something we're going to have to monitor and make sure we balance while we save. So I think in the outlook, our net debt to GDP does increase, but I wouldn't say dramatically. It goes from about 7.3% to 9.3%. Still below 10%, only province in the country that's even close to that. For example, BC, I think, is going from 20 or 22% to 34% during the time of their outlook. So we're trying to do all the things: fund a growing province, save for the future, and manage our debt load.
Thank you, Mr. Chair, through you to the minister. And we'll go on. In line 10 of the government estimates, page 242, the budget for communications and public engagement remains essentially flat with a slight increase. So through you, Chair, to the minister, can you or your officials tell us about initiatives that CPE has undertaken, such as Alberta is Calling, the signing bonus that was slated for this year, or programs that we may see in the 2025-26 reporting period?
Yeah. Well, happy to answer. CP provides full-service communications, engagement, and marketing support for all of government. This includes media relations, ministry communications, public engagement, and providing Albertans with information through the development and management of the alberta.ca website and Your Alberta social media channels. As you point out, CP's budget has remained flat for the past 5 years and is mainly salary driven, with the budget for things like advertising generally paid for by other ministries. CP is involved in everything the government does, from working on news releases to setting up events to the government's web presence to the Premier's correspondence unit. A few examples: Scrap the Cap campaign to promote the importance of Alberta's energy industry to jobs and affordability around the country, an advertising campaign to promote the skilled trades as a rewarding career opportunity, increased advertising investments to reduce wildfires and provide information to support public safety, advertising that provided Albertans hopefully better understanding and information on electricity options to help them reduce their power costs. CP also ran important targeted campaigns to increase awareness of spousal abuse support lines and mental health supports during the winter holidays. So in total, CP ran 40 ad campaigns last year and anticipates a similar volume for the upcoming year. Although their budget remains flat, they're getting the job done.
Thank you, Mr. Chair, through you to the minister for that answer. I think we have time for one quick question to finish off with. Line 7.2 of government estimates, page 242, shows the budget for automobile insurance rate board, and we've talked about this a little bit so far, is remaining flat this year. The GOA is introducing a Care First insurance model that will lead to better, faster, and cheaper auto insurance for drivers across Alberta while ensuring it remains privately delivered. So, through you, Chair, to the minister, what sort of work does the AIRB do to support Albertans? And will the workload of AIRB increase once our Care First insurance is delivering cheaper insurance for Albertans in the future?
Yeah, thank you. First and foremost, AIRB regulates insurance rates proposed by insurance companies to ensure that they are justified and not excessive. Rate filings go through extensive review, including on how proposed changes impact customers. The AIRB protects consumer interests by preventing unfair pricing practices and monitoring the actions of the industry. It works in partnership with the Superintendent of Insurance's staff to ensure fairness for Albertans. The AIRB supports Albertans by providing education and advice on purchasing auto insurance. For example, the AIRB created a new website, www.airbfordrivers.ca, that guides Albertans through the insurance purchasing process. Online tools are available, such as rate comparisons, average premium by postal code, and a calculator to determine your grid rate or price ceiling for basic coverage. The board's consumer representative surveys Albertans each year and prepares a report as part of the annual review. This report is almost done.
Member McDougall, if you could introduce yourself for the record.
Miles McDougall, MLA for Calgary Fish Creek.
Okay, and Member Kinde, go ahead, you have 10 minutes.
Thank you, Mr. Chair. So moving on to AIMCO. AIMCO recently let go employees in New York and Singapore. What was the severance payment for those severances?
I have to ask Nicole to come up with it. I think we'd have to look at a line item on their public accounts for overall severance, and
Okay.
I don't know if you'd like an AIMCO representative to come to the mic. I certainly don't have that here.
Actually, I wouldn't mind because I got a couple more AIMCO questions. If you're okay with that.
Paul?
Hey, good afternoon. My name is Paul Angel, Chief Financial Officer of AIMCO.
Pleasure to meet you, Paul. So do you have a sense of what the severance payments were in aggregate for New York and Singapore terminations?
Not right now. I think they're still working through that, but we should have that probably within a month or so.
Okay,
So they'll be included in our year-end accounts.
perfect. Thank you. You also have to close the One Vanderbilt Square office.
Right.
So what's the lease termination payments for those? Are there any terminations? Are we holding it, or like what's the plan for that office?
Well, the plan for the office right now is to sublease it. So we have contacted a broker as well as the owner of the building. And we do have some interest in the building. So we want to avoid, obviously, paying any termination costs. We do have a right in our lease to terminate the lease, I think, in a year for about $1 million. But we want to avoid that by subletting the property as soon as possible.
Okay, so nothing's really been booked yet for as far as a loss on sublease or anything like that. Do you anticipate a loss or a gain on the sublease?
What I'm hearing is probably around what we're leasing today, so pretty close.
Okay.
But we got to look at finalizing any provision required for our accounts at the end of the month. So we're working through that right now.
Okay, excellent. Thank you. And finally, do these costs, are they borne by taxpayers or by pensioners? Like the
No, all of our costs are recovered by, through our clients, pensioners.
okay.
Yeah, they're through
Yeah,
Heritage,
and us through the Heritage
another
Fund, that's
client.
right, as one of those clients. So if pension funds are, some of your pension clients are looking at kind of, there's been a few changes at AIMCO. Have you had them come back to you and say, hey, we need to take a look at moving our pension funds elsewhere? Like, is there any risk around that, or is it legislated? Like, how does that work?
You want to take that?
Sure, thanks, Paul. Well, I'd say that
Thank you
thank
very
you very much. The conversations that we've had have been resoundingly positive. I don't know if you want to comment, Deputy Minister White, but they appreciate the intent, and I haven't heard concern in that way. But yes, they're legislated to be managed by AIMCO.
Okay. Thank you. I'm sorry, I have another detailed in the weeds AIMCO question about third-party management fees. Roughly $300 million, I think, every year in third-party management. How do you assess whether we're paying for alpha, like we're actually paying for above average returns, or whether we're paying for luck? And I know that is a very, very difficult question to answer, but it is also a delicious, it is a massive pot of money.
Yeah. So I would say, so the portfolio managers are really accountable to oversee their portfolios, including anything that's managed by third parties. So they would actually engage or contract with third parties. So they all have really explicit performance hurdles in their contracts. So if they exceed those hurdles, then they get a performance bonus, performance cost. So as far as, ensuring that we actually get value for money, that's part of the portfolio manager's job. So they continually monitor the performance of these asset managers. And do all the right due diligence, obviously, at the outset as well, before onboarding an external asset manager, and then having provisions within the contract to ensure that, they get paid when they perform. So I think that's really, really important, to have those hurdles in the contracts.
But they could be performing simply by taking more taking more risk, right? And so when markets are going up, they look like they're doing great. When markets go down, that's when you notice. That's the Warren Buffett quote that when the tide goes out, you see who's swimming naked. Is there any way that, how do you manage that proactively?
Well, I think that's established in what their performance hurdles are and how much risk appetite that they have to manage within. So that's part of the due diligence process, is how much risk they are actually taking.
And I mean, we are in the midst of a procurement scandal in a different ministry. How comfortable are you that these procurement efforts are completely above board and based solely on the relative merits of various different options?
No, I'm comfortable. Like, you mean talking about how we engage third-party asset managers? Yes. So a lot of those contracts that we would have are industry standard, so that's right.
Okay, and expensive dinners in New York?
Not me.
Okay. Rangers tickets? No.
I would just add in, Samir, in the contact I've had with the new board, they're very focused on your exact question.
Okay.
Around alpha, is this true performance, or is it just taking more risk? I know that's something that they're concerned with, so.
Okay. Excellent. So another question about just the capital expenditure for Aimco Refresh. Again, I understand these trading systems are very expensive. It looks as though we're coming to the end of that. Is that correct? Or is there some reallocation that needs to happen where funds are pushed out, or if there's change orders or that sort of thing?
So this is our business transformation program. So that program we expect to go live at the end of this year. There is no capital spend. All that spend is through an operating line because it's not, it's software as a service, it's in cloud technology, so it's all expensed.
Okay, thank you very much.
Okay,
I guess, yeah, thank you. I really appreciate that. Stepping back to the Heritage Fund for a minute, so when we think about the return expectations that you've set, 9% average for the next 25 years, 10.5% if we say that, starting 3 years from now, what are the benchmarks that you're looking at as far as other sovereign wealth funds go? And what kind of volatility are we going to be expecting by reaching for those sorts of yields?
It's a good question, but I'm afraid that that's going to be the board's job to determine. I know it's early days, but that's some of the things they'll have to pin down.
But the board will be given a mandate to earn this, get to $250 billion, right?
Correct.
And so could it be feasible that they come back and say, hey, look, no one's managed 9% a year for 25 years?
Certainly not in the conversations that I've had. I think, to be frank, I think they think it's very achievable and conservative.
Okay. The Heritage Fund Opportunities Corp. Then, so that's being moved out of the Heritage Fund, and I remember speaking with Dr. Puffer in committee about this last year, where she emphasized again and again that the Heritage Fund is managed as an endowment and is not managed as a pension fund. So why does the need to create a separate operations corp with a separate now $10 million a year line item? How does that, what's the necessity of that when the Heritage Fund could simply be operated in that way, and seems as though it's going to be operated in that way?
I think we were looking for professional management. I'd say that if it's being invested, I believe you said like an endowment, not like a pension. I think those things, you could say those things are invested in a similar way in a lot of ways, right? You still have, retained incomes coming out. You have disbursements, so that change is huge. it wasn't, so just so we're clear, I forget how you phrased that, but
Maybe we can
come
go
back to that. I was just gonna talk about the corporation being separate.
Just so everyone knows, we'll take a 5-minute break at the end of this 10-minute slot. So Member Hunter, you have 10 minutes.
All right, thank you, Mr. Chair, and through you to the Minister, thank you very much for your team and what you guys do. On page 182 of the Ministry Business Plan, under Key Objective 2.3, we see that the Ministry of Treasury Board and Finance is working with the Financial Services Concierge and Invest Alberta to help guide financial service companies and innovators to guide them through Alberta's legislative and regulatory framework. I know that when I was Red Tape Reduction Minister, we thought that that was an extremely important part to have within each ministry so that there is that concierge service. I know that down in the States, when a company or an organization wants to do something, usually they have that concierge service to be able to help them shepherd them through. So I'm just trying to, can you help give us some understanding about how this will help for, circumnavigating through sometimes very difficult regulatory regimes in Alberta?
Yeah, I think so I just was gonna start and say, I know I've worked with you in the past, and we've tried to use, all of the, the tools available, whether that was in agriculture or the like, to ensure that, any potential opportunity was fully assessed, and they were well aware of what Alberta has to offer, right down to working with the municipalities on dashboards and the like to know, what land's available, what land's by, a rail spur, or how much water do you need for a pea processing plant. So I know we've worked through that. Our role's a little different in finance. The Financial Services Concierge assists both new and existing financial services and fintech companies in their efforts to establish or expand operations or products and services in Alberta. The concierge saves time and resources for financial institutions by providing them timely information needed to operate within Alberta's financial sector. The concierge helps financial services companies better understand Alberta's regulatory environment, making it easier for them to set up shop and create jobs. The Financial Services Concierge has had discussions with over 40 entities since its inception. The entities include digital asset custodians and trading platforms, payday lenders, money service businesses, credit unions, trust companies, and investment marketplaces. The Financial Services Concierge will continue into 25-26. There are no additional costs associated with operating the Financial Services Concierge, as all costs are absorbed by current budget allocations. So a little niche part, but part of the whole offerings of government to try to land investment.
All right. So is Alberta considered as one of the forefront among the provinces when it comes to fintech?
Yeah, the concierge, it helps financial service companies better understand Alberta's regulatory environment. Like I said, making it easier to set up shop and create jobs. This supports the perception that Alberta's open for business, for sure. The concierge works with the Alberta Securities Commission and their Financial Innovation Hub Committee. This committee works with the Canadian Securities Administrators on this cooperative initiative to support fintech businesses looking to offer innovative products, services, and applications across Canada. But yeah, I'd definitely say they're leaders across the country, and I think the results speak for themselves.
All right, thank you, Minister. So on page 182 of the Ministry's business plan, under Key Objective 2.4, we see that the Ministry is working hard to ensure Alberta's insurance market is stable, accessible, and affordable going into the 25-26 years, while balancing the need to ensure this market is sustainable in the long term. So, Minister, through the chair to you, I see the supervisory framework for captive insurance companies was updated October the 11th, 2024. How will this change in framework benefit Albertans going into the 25-26 year?
The supervisory framework was first adopted by the Superintendent of Insurance in 2013. It documents the structured approach used by the superintendent to supervise a variety of Alberta-based insurance entities. Initially, it included provincial insurers like AMA Insurance and Peace Hills Insurance, and reciprocal insurance exchanges like Alberta's Real Estate Insurance Exchange. With the adoption of captive insurance company legislation in 2022, the superintendent began work to update the framework to include captives. The updated framework was published in October of 24. By establishing clear regulatory standards to ensure captives remain financially sound and operate safely, the framework enhances public confidence in Alberta's insurance market and strengthens trust in the province's broader financial system. Additionally, the framework offers transparency to prospective captive owners about regulatory expectations, helping them make informed decisions about establishing captives in Alberta, ultimately supporting economic growth, job creation, and the inflow of capital to the province. As of January 31st, 2025, Alberta has welcomed 29 captive insurance companies and looks forward to welcoming many more. Global captive insurance managers have expressed keen interest in Alberta's captive insurance possibilities. Of the 29 captives, 7 operate in the service industry, 6 in real estate, 5 in transportation, 5 in manufacturing, 3 in hospitality, and 1 each in agriculture, construction, and energy. In the 12 months ending February 24, we have added 12 captive insurance companies. So you can see it's really ramping up. But
Sounds great, Minister. Thank you. Now, on page 245 of the estimates document under line item for motor vehicle accident claims, I see that the funding for this item will be increasing by $4 million over the 25-26 reporting period. When compared to the last year. Minister, through you, or through the chair to you, can you please explain to this committee how this additional $4 million will be allocated?
Sure, and we did kind of go through this with an opposition question, but in the motor vehicle accident claims program, we're seeing an increase in the number of applicants entering the program, along with a higher average medical claims cost. So volume plus higher claims, resulting in higher injury claims expense. Most of the $4 million will help address this estimated increase.
Okay, thank you. And also, Minister, through the chair, the forecast for this reporting period saw the expense for this item go up to about $46 million overall, meaning the budget for 25-26 is actually under the forecast of this year. Does the minister believe $43 million is adequate to support motor vehicle claims going to 25-26?
Well, we will monitor it closely, but there's a lot of variance. So the largest portion of the expense for the motor vehicle accident claims program reflects dollars paid to claimants. This amount varies depending on the number of claims and the dollar value of the claims closed. We do monitor the program closely, and given current information, we believe that $43 million will be adequate to support this program in this fiscal year.
All right, thank you, Minister. Now, on page 249 of the government estimates under the item labeled net income from commercial operations, we see that the Ministry of Treasury, Board and Finance is expecting to see a $2.13 million more increase than their forecast from this reporting period, and $18 million more than was budgeted for 24-25. So, Minister, through the chair to you, can you please explain this significant jump from our current reporting period and give some insight into how this $2.13 million will be reinvested going forward?
Yeah, thank you. So the $2.13 million that you noted is part of the general revenue fund. Those increases would be available to support, any of the needs in Albertans in Budget 25. The changes are incremental increases from captive insurance and trust company registrations and loan and trust company and pensions annual fees. ATB Financial is a government business enterprise, and their net income is affected by many factors, including general economic conditions. ATB's net income can fluctuate significantly with changing economic conditions. ATB's net income is retained by ATB. It does not go into the general revenue fund. AATB reinvest their retained earnings back into the community through additional loans. And I believe they're projecting substantial loan growth out to 2030. We just had to increase their borrowing limit from 9 to 11 billion, and that's built on loan growth.
All right, thank you, Minister.
Thank you very much. We will now take a 5-minute break, so back at 4:59. Thank you. take your seats and we will carry on for the balance of the meeting. And we are on the government side. So who we got next here? Member Calahoo Stonehouse? I'm sorry, yeah, geez. Get me a long day. Member Calahoo Stonehouse, go ahead.
Danse, Kapapamas Kamganaka Square, Natsiga soon, Michelle First Nation, Otsinia. Thank you, Mr. Speaker, and thank you to everyone here today for your work in what we are discussing. I want to remind everyone that Alberta is a signatory to the United Nations Declaration of the Rights of Indigenous Peoples. This declaration provides a framework for reconciliation, healing, and peace, as well as harmonious and cooperative relations based in the principles of justice, democracy, respect for human rights, and non-discriminatory and good faith. Included with the budget documents is the government strategic plan. The budget is a reflection of the government's priorities and commitment to Albertans. As such, the process of developing the budget and the budget documents themselves should reflect the government's ongoing commitment to the truth and reconciliation. This foundation of the budgeting process is reflected on page 27 of the Strategic Plan Priority 2, Objective 6. Forming lasting and meaningful partnerships with First Nations, Métis, and Inuit communities. This section mentions many items from the Ministry of Indigenous Relations, but also items that perhaps span across other ministries, including access to education and healthcare. My question to you, to the Minister, through you, Mr. Chair, is how is reconciliation built into the budget discussions? Are there directives for all ministries to consider reconciliation as they bring forward their budget requests and business plans?
Well, we don't give directives to specific ministries. It's usually the information's flowing the other way. They're coming to us with, their budget requirements and requests, which are many. But I do know, in working closely with the Minister of Indigenous Relations, those conversations are had, but it isn't something that we direct from Treasury Board and Finance.
Thank you for that. As you mentioned earlier, that the Alberta government put in the equity policy in 2017, and that there is Indigenous protocol training. Is this correct? Through the chair?
Within PSC, correct, yeah, I believe it was 2017.
Excellent. But you also mentioned that this receives no funding. Is that correct?
Correct.
So I'm curious, how do folks access programming and how do they take training if it is not mandatory and not funded?
It's absorbed from within their budget, so it's not like it's free, but they're paying for it out of their existing budget. But I can ask Heather to join us at the mic if you'd like, from PSC.
Thank you. Thank you for the question. I'm Heather Kelta-Gironi, the Deputy Minister and Public Service Commissioner with the Public Service Commission. And so to answer the question around funding, a lot of the courses that have been developed are already, have been developed, so the model for funding it is complete. They're already existing. They're available online to employees on demand, and many of them also are delivered in-house. And so to Minister's point, it's not necessarily about additional funding that's required to maintain those courses. Thank you.
Great, thank you. Through the chair, Minister, the budget considers economic development and allocates funding to economic development initiatives with Indigenous peoples. However, on page 129 of government estimates, we see the budget for the Alberta Indigenous Opportunity Corporation is being cut in half from $4 million to $2 million. As our Indigenous communities are among the fastest growing but have lower family incomes and lower access to employment, should the government be cutting these funds in half?
Well, I'd look at it a different way. All along, the hope was that AIOC would be able to stand on its own and be, self-sufficient. That's what's happening. They're going to be able to, be true standalone. We just increased their borrowing limit not long ago. yeah, they're being very successful, but the goal was never to have that as an ongoing line item. There was going to be something that they were going to be able to handle in-house, and it's happening sooner than we thought.
Okay, and what is the proof that it is standing on its own?
That they don't require a line item for administration and operations, that they're able to fund from within.
Thank you. We see that you mentioned earlier that 1.8 is going to mental health and addiction procurement. With,
But that's the whole budget.
sorry, 1.8, you're right, correct, 1.8 into mental health and addiction. My question is around procurement of these dollars, considering we're in the middle of a procurement scandal. How can we be sure that Indigenous nations and communities have access to this 1.8 mental health dollars that are allocated often to facilities in their nations?
Yeah, I think that's a question better served to the Minister of Mental Health and Addiction, but I know it's something
Okay.
that they're, cognizant of. That's part of their mandate.
Thank you. Does the government consider reconciliation calls to action 92 dealing with business reconciliation? Does the government commit to meaningful consultation, building respectful relationships, and obtaining the free, prior, and informed consent of Indigenous peoples before proceeding with any economic development projects?
We'll definitely be following our current policy, but I don't know if I have much more to add. I'll ask the team. Yeah, we'll continue to follow the current policy.
I will remind the minister that we recently saw a business person announce an agreement with the government of Alberta on an AI data center in northwestern Alberta. Surprising, First Nations in the area had not heard of the project and or been consulted. So my question through the chair is, does the government ensure that Indigenous people have equitable access to jobs, training and education opportunities in the corporate sector, and that Indigenous communities gain long-term sustainable benefits from economic development projects that are proposed in their area?
Well, no data centers have been finalized and approved that I'm aware of. So I would ask the question of the Minister of Indigenous Relations, but I'm afraid I can't give you much more.
Thank you. I'm curious to how the ministry ensures that all of our ministries provide education for management and staff on the history of Indigenous peoples, including the history of the legacy of the Indian residential schools, the United Nations Declaration on the Rights of Indigenous Peoples, the Treaty 6, 7, and 8, the Métis communities, Indigenous law, and Aboriginal Crown relations. Is funding for this, will it require skill-based training and intercultural competency, cultural resolution, human rights, and anti-racism included on any line in the budget this far?
I might ask Heather to come to the mic, if you don't mind, Heather.
Hi again, Heather Caltagirone. So in terms of training and learning and development for Alberta Public Service employees, we do have training that speaks to respect in the workplace, and it covers a variety of topics related to that. Right now, we've got about an 82% compliance rate across the APS for training. That looks at really making sure that employees understand and value differences. So hopefully that answers your question.
I would just like to further that question. How are you evaluating that your program is working?
We measure, our statistics are measuring two things. One is the amount of employees that do actually complete the training. And then we do look at, once that training is completed, are we noticing any changes to, investigations or complaints that come forward with that regard?
Thank you. Mr. Chair, around the world, we have seen countries and subnational jurisdictions adopt wellness indicators that look beyond the GDP. In many cases, these indicators can be such as health, wellness, and/or joy. As the government developed outcome measures for this budget, were Indigenous peoples consulted on any outcomes outside of the GDP?
This whole book is full of outcome measures other than GDP, so it's obviously varies ministry to ministry. But I don't know if I have much more I can give you from this chair. Like hundreds of them.
And were Indigenous peoples consulted on any of them?
I'd have to follow up with the Minister of Indigenous Relations.
Okay, could I encourage you to follow up with all your ministries?
Encouragement sent.
Thank you, I appreciate that. And lastly, for me, again, I want to go back to the procurement decisions on Indigenous lands that, and the projects that are directly impacting Indigenous peoples. Does the government give consideration to Indigenous-owned companies or skill development and employment opportunities to Indigenous peoples? If so, how are we measuring this? And who is tracking?
So the policy's in the Ministry of Indigenous Relations, and they do exist, and we do follow them, but I'm not the minister responsible for them.
Excellent. Thank you for your question. Thank you for your responses.
Very much. We'll go now to the government side. And Member McDougall, you have 10 minutes.
Thank you very much, Chair. On page 246 of the government estimates, I can see under loans and advances that the Alberta Petroleum Marketing Commission will receive an additional $550 million in loans and advances over the 2025-26 reporting period in comparison to last year's estimates. Petroleum plays a huge role in Alberta's economy, and particularly with the idea that Alberta is going to take a greater share of its royalties in actual petroleum, which is something that I support. It's good to see the Treasury Board and Finance are standing by Alberta's priorities. Can the Minister explain this increase in loans and advances towards the Alberta APMC over the next reporting period?
The question, a lot of it is to do with the Sturgeon refinery. APMC is a 50-50 partner in the Northwest Redwater Partnership with Canadian Natural Resources. NWRP operates the Sturgeon refinery, holds the external debt financing incurred for the initial capital construction costs, and manages the processing agreement that establishes the toll payer arrangement. Under the processing agreement with NWRP, APMC is a 75% toll payer, meaning APMC is responsible for 75% of the cash flow for the Sturgeon refinery, including any cash flow deficits. CNRL is responsible for the remaining 25% of toll payer funding obligations. The province will increase the borrowing limit to APMC to allow APMC to meet their financial obligations under the processing agreement. While APMC could legally borrow from other sources, borrowing from government is the lowest cost financing alternative for both parties.
Thank you. We'll change pace here. On page 181 of the Ministry Business Plan, I bring to attention the Performance Measure 1E, which is the Market Value of Alberta Heritage Trust Fund, which we've talked about a little bit already today, since market value since 2019. The performance measure speaks to itself, showing Alberta's Heritage Trust Fund is increasing steadily year after year, reaching $24.3 billion at the end of recorded at the end of the second fiscal quarter. To the Minister, through the Chair, what is being done to ensure the Heritage Savings Trust Fund increases year over year so we can reach the $250 billion by 2050?
Well, thank you for the question. I know we've discussed this a little today. But within budget 2024, we signaled a renewed commitment by government to the Alberta Heritage Savings Trust Fund's original principles, which prioritize sustainable growth and prudent stewardship of non-renewable resource income for future generations. This aligns with Alberta's fiscal framework introduced in budget 23, which mandates allocating a portion of surplus cash to savings. Recent reforms and measures taken to build and further strengthen the fund would include, and this is the most important piece in my mind, the income retention. Amended legislation allows for 100% of the Heritage Fund's net earnings to be reinvested within the fund, which protects the Heritage Fund against inflation and allows all income to be compounded. retaining investment earnings in the Heritage Fund fuels and sustains its growth over an extended period of time. Around new investment, the government is depositing an additional $2 billion into the Heritage Fund in fiscal year 24-25. That represents the single largest deposit, if you will, to the fund in decades. Budget 25 did announce an additional $1 billion of surplus cash to be allocated to the Heritage Fund in 2025. So that's surplus cash from the fiscal year 24-25 that will be added. And around revitalized growth, the government is committed to grow the fund to $250 billion or more by 2050, as described in the roadmap, which was publicly released. You were there, Emily McDougall, January 29th, 2025. Our revitalized investment strategy will prioritize long-term asset growth using prudent governance approach, which over time will enhance Alberta's fiscal resilience against fluctuations or declines in non-renewable resource revenues while ensuring provincial prosperity for years to come. Should also mention the creation of the Heritage Fund Opportunities Corporation. This independent provincial corporation will operate at arm's length from government with a governance framework centered on transparency, accountability, and sound financial stewardship. HFOC's mandate is to maximize long-term returns on a portion of Heritage Fund assets using an efficient Made in Alberta investment model to strengthen asset diversification, encourage capital appreciation, and prudently monitor and manage investment risks. Investments will align with Alberta's broader economic goals and identity, fostering growth in sectors beyond traditional oil and natural gas to help mitigate risks associated with non-renewable resource revenue volatility. Government actions and investment performance have increased the Heritage Fund's value to $25 billion in the latest fiscal quarter of 24-25, which is obviously the largest amount in the fund's history. The Heritage Fund has grown by $7.2 billion since 2021, which I think is remarkable and amazing for Alberta's future.
It's certainly good news. As you'll recall, at that announcement in July of last year, I made mention of the fact that I was a staffer in the Treasurer's office at the time when the decision was made to stop keeping the income within the Heritage Trust Fund. That was a result in part because some of the economic dislocation that took place throughout the 1980s, lower oil prices, national energy program, etc., that accumulated and caused issues for the finances of the province. To the minister through the chair, with the looming threat of tariffs from the United States and all that economic dislocation that may cause, do you see any way that this is going to hinder the efforts of the Heritage Savings Trust Fund going into 25-26?
Well, it definitely will provide challenges, but also, I'm sure, amazing opportunities as things, change on a geopolitical level. The rollout of announced U.S. tariffs is a developing situation. Could have changed while we're in the room just now, and we don't know. There continues to be a lot of unknowns with respect to the scope, the implementation, the term, and the financial impact around U.S. tariffs, and the resulting trade and tariff responses of regions and countries such as Alberta, Canada, and how they'll be impacted by recent tariff announcements. With respect to the investments of the Heritage Savings Trust Fund, AIMCO will continue to monitor and assess potential long-term impacts of tariff actions. For the past number of weeks, AIMCO has been defensively positioned at the total fund level with an underweight allocation to public equities. This underweight position in public equities reflects AIMCO's concern for U.S. and global growth amid not only tariffs, but given the announced cuts to U.S. federal government programs, the impact of U.S. immigration policies on labor supply, and likely business investment pullback from growing policy uncertainty. The Heritage Fund will continue to be managed by AIMCO with prudent asset allocations, appropriate diversification, and a long-term investment horizon. Despite recent tariff announcements, the Heritage Fund will continue to grow over decades, given a commitment by government to reinvest all future Heritage Fund earnings back into the fund, with no planned withdrawals from the fund, to ensure all income is retained and reinvested to capitalize on compounding returns. That's the most important part. This we're very confident that this will work, but it will take consistent commitment from government Alberta as the years go by.
Thank you for that. In the last minute, I'll try to make this quick, and I hope it didn't come up earlier in this meeting. On Performance Indicator 1C, Alberta's tax advantage compared to other provinces. I see the Alberta advantage is still growing for individuals and business across the province. In 25-26, you see Alberta tax advantage is about $20.1 billion when compared to other provinces, which is an incredible figure. And to the Minister through the Chair, could the Minister please explain how you're going to be able to consistently outperform other provinces when it comes to our tax advantage?
Alberta's committed to a low tax environment that lets Albertans, keep more of their own dollars, and also supports businesses to invest here and create jobs. In addition to no sales tax, Albertans also benefit from low personal income tax, low fuel taxes, payroll tax. On the business side, Alberta businesses benefit from the lowest corporate tax rate in the country, 30% lower than the next.
Thank you very much, Minister. We'll go to the opposition side. Member Ellingson, go ahead.
Yeah, thank you, Chair. And as we jump into this section, I think the Minister has a prepped response to an earlier question.
Yes, bear with me, Mr. Ellingson.
No problem. You didn't know it was going to bounce to me.
We had some school questions, and then what was the other one?
Oh, now I'm going to have to pull up my morning notes.
Okay. So there are two schools in Nolan Hill. One K-9 school is included in P3.
Oh, yeah, and it was the Catholic school that I was interested in because that one was approved for construction 2 years ago, and it was, the information we have is that it's a P3. And the infrastructure minister had said that, or his office had said the P3 had not yet been negotiated.
Okay, so that is this one. One K-9 school is included in P3 School Bundle 5, which was approved for P3 construction in January 2025 by Treasury Board. This project was originally announced in budget 2023. There are two schools in project status.
Sorry, just with that January 2025 by Treasury Board, does that mean there is a P3 contract now and we can expect construction to begin?
Yes.
Cool, thank you.
Yeah, we'll have a more precise completion date. Will be determined in more detail with the contractor after the agreement is signed. There's also a K-4 in Nolan Hill School included in budget 25 for design funds.
Yeah. There's one in Sherwood, there's one in Kincora, and there's one in Sage Hill. Yeah.
Yeah, and design funds were approved in the 2025 budget for a 5 to 9 school in Nolan Hill, Sherwood area. I think you also asked about how many P3 school projects there were.
Correct.
Completed 45, recently awarded 6. That's what I have. I thought you asked me something else too.
Yes, so the something else was,
Future 17 for a total of 68 on P3s.
So I will say, thank you for indulging me on constituent specific questions, allowing me to slide that in so that I can get back to my constituents, because trust me, every single day I'm asked about schools. I think the other question that I had was going back to the tobacco settlement.
Yes.
And 750 million, it's estimated that maybe it'll be 750 million coming this year. I think that's not in the budget because we don't really know yet. But maybe you can just tell me about how, like, when that money comes, like, how we can be assured that it'll be, like, allocated to the funds, how it was intended through the settlement, and that it gets, like, slotted into the appropriate, like, lines.
So the reason I'm glad you brought this up, because I told you a number that wasn't correct. It was 3.1 billion is what we're expecting to be Alberta's share. I said 4.1 billion.
Yeah.
But we still would expect, although it's an estimate, that the lump sum payment we would expect first would be around 750 million. And like I said, they're still figuring how to best report that and account for it. As for, so it'll go to general revenue will be where it will go first, and then a decision will have to be made on what's done with it.
Well, I'm sure, like, there will probably be rules along, like, with the settlement, like directing how it would be used, I expect.
Potentially, I haven't been given that detail, but, you know, we spend far more than the settlement on health every year, so.
We do.
Yeah.
We can talk about that at a later date. Maybe in the mid-year update, if we have a chance to chat about that. So thank you for responding to that. Thank you for doing the homework in between, even though everybody's been working already 16-hour days for the last month and a half. I want to jump back into some of the questioning that we had around with the ATB that my colleague, Member Haji, had picked up on. And I just wanted, the thread around ATB's mandate is a question that was also asked last year, and that your response was that mandate process was still kind of ongoing. And so I think we're appreciating the benefits that ATB provides. I've got more questions around that, but just is there any report or outcome around those mandate conversations? Do we see potentially any revised mandate for ATB, or will it be status quo?
Well, unfortunately, I'd ask you to be patient. The dividend took a lot of the, bandwidth at that time, but those conversations do continue. It's something we're really in the middle of right now, but we'll have more to say later.
Thank you. So just continuing, you'll find out that I'm a bit of a fan of ATB, but so we know ATB provides a number of services to businesses across the province. We talked about that. As we think about their mandate, I guess I'll assume, but I'll let you answer. Conversations with ATB about any challenges that are being faced in servicing businesses, and whether or not there's any opportunity for mandate changes to help them serve businesses.
Well, the conversations in the back and forth is obviously, fluid. Usually I converse with the board chair. That's the way that those discussions happen. I know they do have, concerns around uncertainty, like I'm sure every lending institution has currently. But nothing that's leading us to, down a prescriptive path about a mandate change per se. But there are challenges in the landscape for sure.
Thank you for that. And through the chair, just some more kind of information or clarity around ATB serves about 800,000 Albertans, many in rural communities, most probably in rural communities. And I'm wondering if the minister has any information that could be shared today about the number of ATB clients that might be served that have no other or limited access to any other financial services or banking services in the community that they live in.
I don't have that specific numbers or data in front of me, but I can tell you anecdotally, as I drive to Edmonton 4 hours and come through a lot of these little communities, it's evident that ATB is the only game in town. And so that requires, ATB to be very thoughtful, I would say. We don't have, ATB was built because, we needed to get capital out to the corners of the province. I know you all understand that. And as technology changes and as the demographics of the province changes, that will change for their business case too. And although it isn't in their mandate specifically, I know in conversations with the board chair, they're very mindful of that there's many places where they may be the only lender in town, and so it's front of mind for them when they make any decisions. But I don't have a specific number about, potential impact without alternatives.
Okay, yep. And I grew up in a town that did have other banking services, but ATB was a big deal in Valley View. I had an ATB account when I was a teenager. Unfortunately, I'm old enough that ATB couldn't provide student loans at that time, so I had to switch to another financial institution when I came to the city. In this digital age, and this may be another anecdotal response, many financial institutions are moving more and more of their services online. But there are many Albertans, including seniors, that need that in-person response. And many of them are in those rural communities served by ATB. And so does the ministry have a role of influencing ATB to ensure that those in-person services remain for those Albertans that require it?
I don't know if I have a formal way of addressing that, but I guess, in conversations with the board chair and with the board annually, there's a lot of anecdotal back and forth about, the importance of ATB in every corner, and they're very mindful of, the demographics they serve. Obviously the senior population loves in-person and foot traffic, and maybe slow adopters of what's available otherwise. So I think they know that, and they do, try to work to bring those things into their lives.
Thank you. Member Dick, you have 10 minutes. Go ahead.
Excellent. Thank you very much, Chair. Got some questions here as per usual. Just got a question. We're facing quite a bit of population growth here in Alberta, Minister. The fiscal plan, we kind of mentioned it on page 7. We've seen, well, as you've said, unprecedented growth, but at the same time, this also means more business and potentially more revenue for people, for the province too as well. How are we preparing for more people to come to Alberta through the 2025-2026 reporting period?
Well, yeah, you're not wrong, MLA Dick. 4.4% population growth in the last year is a crazy number. We are expecting that to come down to about 2.5 or 2.6 in this year, and then come down again to 1.4, I believe, in the next 3, or 1.5, 1.6, out to 2028. So still growing, but I think a lot of that will, we've grown so darn fast that I think that could be expected, right? What are we doing to address it in budget 25? I think you see the size of the capital plan. We've made a commitment to bend not break and try to build schools as quickly as the labor force in the province will allow, because we think that's an area that's fundamental priority for any government. We know we need the spaces, and continue to build the roads and bridges and the maintenance that Albertans expect. I said in our first half of the session, the capital plan is large, and I know every MLA in this room on both sides, has things I'm sure they'd like to see added to it. But we do have to be mindful. Not only is it increasing this year's deficit with its size, but we want to make sure that it's real in the sense that it's achievable. And the bigger the capital plan, the more reprofiling you'll have. I talk about BC a lot because they're just a little bit bigger than us, and I like watching where they're going. I think last year they reprofiled almost 26% of their capital plan. So we want to make sure that our stage gating, our policies within Treasury Board, working with infrastructure, we want to make very sure that if that school and courts riding is going in the budget, that the site's serviced, that it's absolutely ready to go, because we don't want to see it delayed a year kicked out into the future, because what it's doing is it's displacing something else that's needed. So the plan's big. I support that obviously, but it's something we have to be mindful of. So I think I'm confident that in budget 25, we're building for this population growth truly as fast as we can. There'll always be debates about this or that. Schools has been a major priority. Investments in health capital also large. Roads, bridges, municipal support extremely large. So I think we're answering the call as prudently as we can, and I guess also just to say that that's one of the reasons we're in a deficit, is we thought that it wouldn't be prudent to clamp down hard right now while this population growth is still the real deal and not starting to subside yet. So I think we're answering the call.
Yeah, no, I appreciate that, Minister. Still in the same just in meeting the challenge here, still on the same page. It is a federal issue, but it's mentioned that inflation is a federal issue. The federal carbon tax is an issue, and now we're looking at potentially facing some pretty unjust tariffs from our southern neighbor. This is significant for the people of Alberta. This is extra money out of their pockets, and it's a huge challenge and a huge hurdle. So, what can you do? What are you guys? What is the ministry of your ministry doing to combat this inflation and make life easier for Albertans here across the province? And I realize you don't have the financial tool of saying, hey, we're not going to stop printing money. So I'm not looking for that, but there is what can we do what can you do in your ministry to combat inflation?
Well, I think our commitment to maintaining Alberta's position as a low tax jurisdiction, we brought in the 8% bracket change, and in a perfect world, I would have rather brought it in after population had settled, but it seemed prudent to do it now with all of the uncertainty with tariffs. It's a way to help 2 million Albertans combat with the uncertainty within their own household. And government doesn't have the fiscal capacity to make people whole. We don't create wealth, we just redistribute it. So I think by showing prudence, following the fiscal rules, that's what maintains the advantage that Alberta has. No payroll tax, no sales tax. Those are real things. And unless we manage that appropriately, at some point those things will go away. There's really only a couple ways to do this. We're dealing with revenue, we're dealing with expense. Another thing that's kind of interesting, when I was at our last in-person FPT, we were joined by Tiff Macklem, and he made it very clear to the federal finance minister and all the provincial finance ministers that everybody's here complaining about inflation. The best thing you can do to help this is get your spending under control. You're not helping the problem, you're making it worse. So even going back to the capital plan conversation, we want to build as much as we can, as efficiently as we can, but at a certain point, not only do you not get it built and it gets delayed, but you also drive up costs on the private sector and even yourself. So I think by just approaching the problem as prudently as possible and make sure that you're contemplating all of those factors, that's how we can best help the problem for Alberta and the whole country.
Appreciate that. Those are big conversations and big challenges that we face. So I appreciate you doing that. I got time for one more question, maybe one more answer here. So jumping over to the fiscal plan, I see on page 120, I see that we're winding down the Alberta Climate Leadership Adjustment Rebate and the Alberta Family Employment Tax Credit. So how much will this, by wrapping up these two programs, how much will the Alberta government be saving overall by winding down? And then, is there any other tax credits available to Albertans going into this fiscal year?
So I'm sure someone's gonna hand me a sheet with that answer, but the truth is they were going to end anyways. They were sunsetting and we sped up the sunset. People have had, 6 years, I believe, to file these, claims and haven't, so, we're bringing up the deadline early just as a cost-saving measure, as we're looking for the nickels, like Court said.
And then, just what other tax credits are available here for Albertans going into 2025, 2026? Is there anything else? I realize we have lowered taxes, but is there any other tax credits that we offer as a province?
We did, we made some amendments to the credits that would complicate the tax cut itself to make sure that no Albertan was made worse off. So those changes were made to address the credit rate changing with the tax rate changing. So those things have been done. When it comes to other credits, oh yeah. So this is kind of back to your first question around the ACLA rebate and the Alberta Family Employment Tax Credit being wound down. The administrative costs of these programs now make up an increasing portion of the total cost to government. Winding up these programs will eliminate ongoing costs, which would be around $2 million a year. Albertans continue to benefit from the Alberta Child and Family Benefit, which provides direct financial assistance to lower and middle income families with children under 18, helping them make ends meet and supporting a better quality of life.
Okay, thanks very much. We'll go over the opposition. Member Ellison, go ahead.
Thank you, Mr. Chair. So we agree on the use of the term nickels. I think we still have work to do on determining which are the best nickels to save.
Debate continues.
I have two questions that one question I'm going to ask and I'm going to pick up from Member Kayanda. You don't have to answer it right now, but just wanted to put it back in the mix for maybe it can come back at the beginning of the next section. Did you have a chance to look at the property tax increase for that woman in Altadore that owns the $900,000 property?
$293.
$293.
My guess was higher. I was wrong.
Okay. So over a third of her tax savings if she's still earning an income. Okay, so now I want to ask, this is coming in from a colleague of mine in agriculture who has some more experience there than I do. There's a business risk management program in agriculture. I understand that it's a statutory payment. You talked earlier, Minister, about how when it comes to helping Albertans through this tariff threat, that what you're most concerned about are your statutory payments. If the business risk management program for farmers and agriculture is statutory, is it included or embedded in the budget? Are we considering that there might be more funds allocated to that program in a tariff situation?
We are, but it could be worse. But I guess to give you a little background, it is statutory. It's a unique program. I was there when we signed the last one actually, because I was the ag minister. But there's $250 billion worth of programming under the Sustainable Canadian Ag Partnership. So when you view something like crop insurance, there's a federal portion, provincial portion, and then the farmers pay the rest. I think it's 36% for the feds, 24% for the province, and 40% for the individual farmer. And what that does is creates a premium pool. And where we're on the hook is if you have a year where it outweighs the premium pool. And we did have that not long ago where the pool was completely depleted. And that can change fairly quickly. They actually lowered premiums not that many years ago before I was the Minister of Agriculture because they had almost $4 billion sitting in the premium pool. And people were asking, is that too much?
And I think for the farmer, it's voluntary participation, is it not? Like farmers can opt in or opt out?
Certainly,
Yeah.
they're on the hook for 40% of it, so we encourage it. There's farmers in certain regions that use it more than others, and that probably speaks to the history of trying to grow crops in different parts of the province. But yeah, it's an indemnity payment that if it gets bad enough, we're on the hook for.
Yeah, thank you for that. Okay, now I'll switch back to some questions along for ATB. So I understand my understanding is maybe one of the significance of the dividend payment is that so that's cash in the bank literally counted that could accrue into the surplus cash at the end of the year, which could then be transferred into the Heritage Fund. But if there were any other agreements with ATB where at the end of the year they decided to like transfer any of their surplus income, would that also go to a cash surplus for the government?
Well, it would, but that doesn't happen. They keep their retained earnings and continue to grow. The dividend's the first of its kind in that way.
So let's hope that they're wildly successful and maybe the dividends go up from here on out.
Yeah.
There was an order in council recently signed by the government raising the loan limit for ATB to 11 billion. That's a substantial increase. Could you talk about that a little bit, about what's driving that increase and maybe what it's used for?
Yeah, it's loan growth, and there's corresponding deposits coming with that, but it's growth out to 2030. So they have a growth chart showing what they think their borrowing requirements will be. I could have Dan come to the mic if you'd like, I'm sure.
That's okay. 5 hours ago, I thought couldn't fill up 6 hours, but now I'm worried about running out of time. So, so I'll thank you for that. I think you've responded. It's that ATB is projecting that growth out to 2030, and that's what led to it. I think it was 8 billion in the past, and it's raised to 11 billion.
9 to 11, I believe.
9 to 11. And so I'll ask just one more question about ATB. My colleague from last year asked this question. I'll just ask it again. Can you just state that there are no intentions today to privatize or sell ATB?
No intentions or conversations.
Thank you. Okay, so now I'll ask some questions on which I think I'm sure everybody here, their favorite topic is the Alberta Pension Plan, which I noticed did pop up on the Ministry Business Plan on page 182. In the list of initiatives, it does state continued consultations with Albertans and discussions with others to determine if an APP would be established. And so now I'll tie back into like the conversations from last year's estimates. Member Phillips had asked at that time, advertising money that was allocated in 23, it was paused as we waited for information to come back from the actuary. I think it was paused all the way through 24, maybe 25. Is that money still kind of like being held for, like, could come back for additional advertising on APP, or or are those funds kind of extinguished?
There's nothing in budget 25 regarding APP.
Okay, and no carry forwards from previous budgets that could still be used to spend. Okay, thank you for that. The
just for clarity, we don't carry forward operating in that way. So
okay.
Look at 25.
There's no provision for carrying forward. You reach the end of the year, it expires. Yeah. It would have to be fresh.
Yeah.
Yeah, for any operating expense item.
Yeah.
Thanks for that clarity too. So we were waiting, the government was waiting for a response from the chief actuary. And the chief actuary did come back, but they didn't come back with a number. Rather, they came back with this is the approach that we think should be taken to come up with a number. And so I'll ask about, like, what are the government's plans from here? Will you do that work in-house now, or will you contract a third party as you did previously with LifeWorks?
So, good question. I'd say what the actuary came back with was certainly not a number. It was maybe a vague approach that also wasn't what was in the legislation, was what they gave back to the federal government. So didn't give us anything that we could take back to Albertans and continue this conversation. So, I know there was some commentary that, well, you have an approach, you should be able to figure out the number. We can't. It's not, they didn't give us a concrete approach. They gave us a vague scenario and then said, and by the way, this doesn't align with the federal legislation.
So given that, and given that it is in the business plan as an initiative, an ongoing initiative, what are your plans then how will you carry that conversation forward with Albertans?
I don't have a plan to carry it forward unless I have more information to bring back with it. That's what I told Albertans. If we got something that we could come back with, we would continue the conversation. But until we hear more from the federal government, they're obviously very busy right now. We have a hard time getting communications back and forth on tariffs and other, immediate issues. I think it would be premature to, tell you what the next step is, but I'm not bringing anything back to Albertans unless we have a concrete number or path.
So nothing in the foreseeable future. The federal government is busy. I think this probably also requires conversations with all of the other provinces as well. It kind of impacts all of them. I'm wondering, I'll go out on a limb here.
That's not in their legislation.
If the chair will provide me with some flexibility here, I'll go out on a limb. If the Minister of Finance has an asset number in mind that he thinks might be palatable to go forward with.
No, and I wouldn't speculate.
Thank you. I guess what I'll say is that I'm happy to hear that there are no plans at this time to move forward. I think that we've heard resoundingly that this is something that Albertans are not interested in proceeding. So we'll put that on hold.
Thank you very much. Our next question comes from Member Yao. You have 10 minutes. Go ahead.
Minister Horner, I'm looking for a little bit of leeway in my questions here. It's about the budget in general, and just, I guess at the heart of it is I'm wondering about your influence on all of our ministries. And at great risk, I'm going to ask some things that will probably offend some of our colleagues, but I mean, it is what it is. I'm a fiscal conservative. I can't say that enough. I really don't feel like we found enough savings and stuff. As an example, driver truck training standards. We took on a standard for the entry-level training, mandatory entry-level training, that virtually no other province and the United States ultimately went with, and we were following the lead of others. I have a friend who was actually allocating the grants for people to get that training. She was telling me 90% of the people that took that training were leaving the province. And that is frustrating. Like, when they take our training, they take our loans, and then they go elsewhere. That's aggravating. And that was in the millions of dollars, if I understand. Municipalities. In Fort McMurray, we merged our municipality with all the surrounding communities and became a regional municipality, a specialized municipality. Strathcona County is another example of that. There's two fine examples of that. Plus, Lac La Biche recently, here, last couple of years, if I understand correctly, they merged their municipalities around them, again, to become a specialized municipality. Lac La Biche is the most recent example, but speaking to a councillor, they have demonstrated savings there in an amazing way. They've told me they're more efficient, they have less managers, more frontline workers, and they've been able to keep their books a little bit more balanced. Under my role as the Northern Alberta Development Council chair, I toured around Northern Alberta and I discovered a couple communities that are really struggling. And their thought was if they could merge with the surrounding municipalities, but admittedly the surrounding municipalities don't necessarily want them because they don't want to break up their little empires, if you will. And that's frustrating when, because that is the ultimate in less government, is having less municipalities, or at least some more cooperation with them. I could even extend that and the amount of government we have towards our desire to, well, not desire, but based on our current numbers for how we allocate MLAs, provincial representatives, I understand Elections Alberta is looking at, because of our population growth, increasing by a couple. or 4 or something like that. In this day of telecommunications and the ability to really communicate with the masses, I question the need for us to even expand that, the numbers, when I wonder if we couldn't just change the number of people that we can represent and just leave it at that without expanding government. Post-secondaries is another example. Again, I have a friend who works for the province, who allocates the money for a lot of the grants for people to get post-secondary education or support there. And then I talked to another group of people who are telling me that the education they get from a certain institution, most companies won't even accept them. My sister is a pharmacist, and she will not accept a student from a certain particular organization that teaches these pharmacy techs or whatever. And I heard of other stories or other anecdotes from others who also won't accept from a certain institution. And I mean, I recognize these aren't your wheelhouse, that these are other questions for other ministries that I have to ask, but I mean, I'm just wondering how these ministries measure the success of the grants and the other allocations they put out there. So with that, I guess my question is, how can you influence these ministries to identify and find these savings? Because I feel that that there are savings to be had, and if we look hard enough. And so with future budgets, I'm wondering what influence do you have in asking these things?
Well, as good question or rant there, Danny. I do appreciate it, and I sense the frustration. It's incumbent on every minister to look at their budget, their historical budget, and a lot of what we see is the new asks. We're looking at we want to see an increase in this program, and they'll walk us through the favorable outcomes that as they see it, or the need. But at any time, I haven't met a minister yet that doesn't say they have more need and defensible things where money could go. Their first step is to look within their own budget and see if their priorities have changed. See if they need to reallocate those resources. If it's under, say, $5 million, they can do it themselves. If not, they come to Treasury Board and explain what they'd like to do. But I think that the period that we're entering is going to lead to a lot of tough conversations with Albertans. It'll be tough conversations for every representative in the chamber about how we prove the path back to balance. So any of the issues you mentioned, I know the MELT training, know it well. I have a Class 1 driver's license. I went through that process back in the day. I've seen how it's affected young people that have tried to get a Class 1 now. And we did, I was there when the minister said, we're going to do this because the U.S. they were kind of leading the charge, and we had signed on to it, and you're not wrong, many didn't follow. But safety is obviously a main priority for us all the time, but I do know the minister's made some changes, and I would expect he'll be looking to make more. And then with any kind of grant, you want to make sure that the policy's sound and that you're doing what you can to impact Albertans first and foremost. We do have freedom of mobility in the country, so people can pack up and leave if they want. Usually that isn't the issue here. It's them coming in droves. But yeah, all of those things need to be looked at. But I think you're going to be in luck because there will be lots of conversations. Everyone will have to put on their conservative hawk hats, as you said, and look at the priorities for Alberta going forward. I view this deficit as kind of a watershed moment where we're all going to have some real conversations about how we move forward. Uncertainty is one thing. I don't think it's prudent to, move too quickly. I know the chair and Member McDougall sat on that committee we ran last summer. And, a lot of people, may have the feeling that, governments are always bloated and there's places you can go that are easy. But in my estimation, there's always, what's the bureaucrat line? Every 10 years, you can find 5% in waste, fraud, and abuse and start over. We did some heavy things in 2019, and we're beginning the process, again now. I know Ms. Kelta-Gironi spoke to the, size of the public service. By the metrics we can see, we're, well situated within a, efficient public service. But I guess my main point is that the decisions and conversations, I think, will get tougher from here on out.
Thank you for that. Well, for your awareness, I know there's going to be a brilliant report out in the north, and I know one of the recommendations is that we evaluate all the spending in that area. So considering that the area would be 50% of the province in land mass, but only address 10% of the people of the province who actually live up there, I believe this would be a good recommendation in allowing the government to evaluate and assess all the spending that goes on in that enormous region, but for very few people, and would be able to provide some good learnings and lessons that could be applied to the rest of the province if that was accepted as a recommendation. I think it's important that we do take a magnifying glass and really identify these things. I don't necessarily want to compare it to what's happening in the United States, but I think they have the right concept of a Department of Government Efficiency. We have red tape reduction. I believe this branch could certainly work on there as an example, but I think the mandate would be really good and provide some of those good recommendations that we could apply right across the government.
Well, the process that we began last summer will continue. I should answer your municipality question. I'm sorry, I forgot that.
All right, Member Ellison, go ahead. You got 10 minutes.
Thank you, Chair, and to the Minister. So I have one more kind of like program set, and then on the next set, I'm just going to go through rapid fire, whatever's left. I'm going to slip, I should have asked my colleague Nathan to ask these questions, but I'm going to slip a little bit into my role as Tech and Innovation from last year. I am interested in asking some more questions around the financial sector regulation and policy in the ministry's estimates. We've heard with the threat of tariffs about how internal trade across the country and interprovincial trade barriers is definitely a concern. I want to acknowledge that Alberta has already done the work to have lowered more of those barriers than any other province. But I'd like to ask a little bit about like where do we think the opportunity is in financial services. So we know that each province maintains its own securities commission, and that those securities commissions do like work in the area of their like provincial securities laws, regulations, registering participants of managers of investment funds and such. And that given that you like our move towards like a free trade agreement, and I think we heard in the JET estimates that maybe there would be a new chapter in the Canadian Free Trade Agreement to include financial services. Is this something where would the minister's department around financial security regulation have a role to play in harmonizing financial securities? And where are we in the conversations around alignment, harmonization of financial regulations across the country?
No, great question. You sound a lot like Stephen Harper there, Court. I've had this conversation with him, and he's led a lot of this initiative. But Stan Magidson at ASA, he's also the chair of CSA. So we don't have a national regulator. I think that's a good thing. All the provinces would agree. But harmonization is important. An endeavor that he's attempting to lead that has fallen short for years is to have a passport. They call it a passport system where if your home base regulator approves it, that the other province will take it at face value, and implement it that way. Up till now, Ontario has been the hurdle. So a lot of these provinces, they're going in their scrum and they're saying, "Oh yeah, we're going to do all this," but then they're not. I'd say Ontario is the main hurdle in this regard, and I think a lot of it is because they have Bay Street, they have a lot of the companies, and I think they think it would somehow impact the perception that they're the one running the show in the country. But yeah, Alberta is a leader in this regard, and we're trying to harmonize constantly. That's an initiative Quebec's also on board with.
And I'll let you keep having those conversations with the Minister of Finance in Ontario. I'm sure it would come no surprise to the opposite side of the aisle that most of my connections in the government of Ontario are environment and social services. But what kind of economic uplift do we think we would get? So there are some numbers around like economic uplift overall if we reduced interprovincial trade barriers. On financial services specifically, if we were able to move to like something like that passport, harmonization passport, what kind of economic uplift do we think we would get from that alone?
We don't have that specific number, but what we do think is that the big advantage is for investment overall for the country. I don't have an Alberta-specific projection, but, you know, if you want to be able to say, like right now the U.S. is saying that they have less regulatory burdens, come invest here. If we can say that, and I think they use the fact that we don't have a national regulator against us in some regards and say, well, I don't want to come there and deal with you all, even though it's largely harmonized through cooperation. So I think the big uplift would just be towards investment across the country, of which Alberta always gets more than its fair share.
Yeah. From my work at Calgary Economic Development, I'll agree with you that we do get an outsized portion in financial services. Not the largest, but we're outsized. A little bit about the regulatory sandbox. I think we had some questions earlier from the other side about supporting financial innovation and fintech with the key objectives on page 182 of the business plan. One, I'd like to ask a little bit more about, like, with that fintech, tell me about how, if we have any specific examples of how that regulatory sandbox has worked to grow fintech companies or attract fintech investments.
Well, if you'll indulge me, this will be a better answer than I'll give, but if Chris Merriman would come to the mic.
I will indulge you.
Okay.
I'm Chris Merriman, Assistant Deputy Minister of Financial Sector Regulation Policy, as well as the Superintendent of Financial Institutions with this hat that I'm wearing right now for this. Great question, member. Appreciate that. When we started the financial services sandbox discussions, we thought we'd get a lot of uplift with it. Fortunately, we actually haven't had anybody come in yet, but we did it in conjunction with the Financial Services Concierge, which is, again, the entry point for new and innovative financial sector companies coming in. So they could be in insurance, they could be in, crypto custodial trusts, things like that. It's very wide. As Minister talked before, payment systems, those types of questions too, payment services companies. So when they a lot of what's happening is they're coming to the province because they're really excited about the sandbox. And then when they get here, they realize, well, we don't need exemptions. Alberta's really good already. So what we're seeing then is that the concierge has taken the work that we thought was going to come from the sandbox, but it really hasn't. All it's done is become a really good way to attract interest into the province, as opposed to the actual use of having to provide exemptions, because that's what the sandbox allows. But we haven't actually had one to model after yet, because of everybody that's come here has said, oh, the existing legislation and regulations allow us to do what we want anyways. But that allows us then to have those discussions with those entities and be able to fit them in as we move forward.
Thank you for that. And I am familiar with many of the fintech companies in Calgary and in Alberta. So, like, there's no question that fintech is growing in Alberta. I certainly won't deny that. And whether or not, I think this question could maybe go back to the minister, or if Mr. Marion wants to answer. But I was curious earlier about like the work with the ASC in that kind of like fintech attraction work. I didn't hear a mention of Invest Alberta or Calgary Economic Development or Edmonton Economic Development, and I'm curious: is there collaboration with those economic development investment attraction agencies together with your department to attract fintech?
Through the concierge, more so than through my team specifically. But yeah, and I just say one more thing. I know Chris answered the sandbox question well. One thing that we thought we'd have to use it for was the halal financing, but didn't in the end. But we thought we would for a moment there.
Yeah, and I might ask about the halal financing. But we know from other jurisdictions that there have been some hiccups in introducing potential halal financing and people not necessarily picking it up. Maybe you can share a little bit about like when the legislation came forward, you wanted it to be kind of like really broad based and then let the financial institutions kind of figure it out. Have we learned anything like taking lessons from other provinces where there were some regulations that came out, but people aren't picking it up because they think it's financially not to their benefit to do so?
Well, it was a challenge because in our view it was mostly novel. There wasn't a lot of provinces to follow for what we did as far as enabling this. But yeah, lots of conversations and consultation. But we were mindful and respectful of not wanting to, upset anyone in the community either. So,
yeah,
tried to make sure it would work and continue to monitor the financial institutions that plan to offer it and make sure it's low cost as possible.
I know. Certainly look forward to that continued work. In my last 10 seconds, constituency specific, about 14% of the population of Calgary Foothills is Muslim. So we're very interested in seeing this move forward.
Thank you very much. Our next from the government side is Member Dick. Go ahead.
Member Dick, can I just answer? Yeah, Emily Yau's other question on.
I'll let you.
Okay, so just just because you brought it up and I didn't answer it in my answer, but just around municipalities, and I've dealt with some of this because I think I represent more than anybody in the legislature. Although the number's dropping fairly fast, we have a dissolution or two every year it seems. But one thing that's clear, in the MGA is that they will determine their outcome. So I've been through a lot of these votes where the small communities having to decide, do they want to join the larger regional municipality usually. I have one that's going on right now, and they're contentious, and generally they lead to good outcomes, but we want people to have self-determination in how that works, and that's how the legislation's written. And like you said, sometimes they don't want to, but if they do get to that point, the surrounding municipality doesn't have a choice. There's tools that we use to help with that. Some of a certain portion of their LGFF rolls forward. Usually these communities are, they've let their infrastructure go, or, have financial challenges, so it can lead to the municipality that's asked to take them on to have some apprehensions about, am I gonna have to raise taxes for the rest of my constituents to fix the problems of that community. So it's complicated, but there is a system within municipal affairs. And it's a good story, especially some of the municipalities that are doing it proactively. They're not doing it because one of them's, in financial trouble. It's just they see that there's, a lot of collaboration that can happen, and they don't want to, build dual infrastructure when it makes no sense. So a lot of that's happening on the ground, but right now self-determination's the policy in the MGA. Sorry, Nolan.
Is it my turn now?
Yes.
All right. I have a couple questions about automobile insurance and just where we're going. I know we've talked quite a bit, Minister, about this, but I think there's a few things here that I would just love some more clarity on. So, our Care First automobile insurance is, we want to make sure it's accessible, affordable, and sustainable over the long term. We've talked a lot about that. I think there's $9.4 million to develop and implement this. Can you expand just on how these funds are going to be used and to make sure that it's for Albertans and not just for insurance companies when the insurance company maybe should be funding some things themselves in this, but to make sure this is actually being used for Albertans and that it's not just going to be an extra benefit of just about 10 million for insurance companies taking advantage of the government.
Certainly not the case. This is our expense to build this as we approach January 1, 2027. There's an amount reflected in the budget of 1.4 million. That's for additional temporary staff for the Care First automobile insurance implementation team, about 13 FTEs, as well as amounts allocated for additional external consultants for legal, actuarial, and other professional services which are not retained internally within the department. These are an estimated additional cost of approximately 8 million. So that's the 9.4 total you referenced. We've budgeted $1 million for legal, 500,000 for advertising, and 6.5 million for consulting and project management. It's going to be important to explain this to Albertans. That's why I referenced the advertising piece. Explain the system.
I appreciate that. What's the timeline for full implementation? I think we've talked about a couple years from now. You've also referenced this next coming week we'll have some more information potentially, but that's still potentially a couple years off when Albertans have some challenges now. So what's the timeline so Albertans can see some hope in the future here?
January 1st, 2027.
Okay, so it's another year and a half, year and 3 quarters.
And we'll need all of that time. It is not kidding when I say it's a heavy lift.
Yeah. It's pretty different for Albertans too as well to have this type of
But there will be legislation in this session.
I like that. So it's kind of 2-part question here too as well. Still on page 182, it seems that there's some publicly traded insurers in Canada seem to have had a profitable year in 2024. So, and that's on page 1. That's outcome 2, page 182. And I know you've been really specific on that the ministry has really keen eyes on this. And part of this is that we keep seeing insurance costs increasing for Albertans despite potential profits and despite affordability measures. So why is there an increase in insurance? Why do these insurers need to raise prices going into this year? And then what's the difference between the Alberta auto profitability and overall profitability? Like there seems to be some challenges there on where they're going and the insurance costs.
No, very good question. I can give you some detail on some of them. The top 6 insurers in Alberta would be Intact, Affinity, Cooperators, Desjardins, Aviva, Wawanesa. Have a combined operating ratio of 100, would assume a break-even premium to operating expense ratio. This does not include the profitability consideration of 6% as defined in regulation. Of the top 5 insurers I mentioned, only 2 would meet the profitability threshold in 2024. Your question about, their auto business and how it works with their greater business, I think that's always a challenge, but the rate board is able to use their specific data from auto. It's not like they're trying to unwind those from their own reporting. So we're confident that the numbers are real, but I know that's something that we do watch closely, and that's why we lowered it from 7% to 6%. but yeah, it's a challenge.
So, thanks for that. So what are the average insurance costs in the past year? And like we've talked about them being rising, are we expecting to see some increase then in this next year or two as well?
See if I can get you the numbers, but yes, I would expect that they're rising. We increased the good driver cap from 5% to 7.5%. You know, part of this is to keep the delivery mechanism, which is the insurance companies around while we get to January 1, 2027. So that's something we watch closely, but yeah, it's 5% plus the 2.5% rider that was introduced to reach the 7.5%. But yeah, it's gonna be quite a lift. And overall, there's another cap that you don't see. It's more internal within the rate board, and that's at 10% on their overall book. But if you individually cause the accident, it would be much more.
I have one question just quickly on property insurance. We don't have a regulated market for property insurance. And that's, I understand the reason why, but specifically, have we baked in anywhere how the tariffs from the US could potentially affect our insurance market?
Okay, well, first on the fact that it isn't regulated here, you're correct. We are doing some work behind the scenes just to look into what's happening on the landscape, and you know, if there's something that could or should be done from our perspective, but that work isn't done. But as a little comparison, I guess, in California, like many U.S. states, property insurance rates are regulated. And as you've seen in the LA fires this year, many California property owners do not have access to property insurance in the regular market and instead purchase it through a public insurance pooling mechanism called FAIR California. There are reports that California has been slow to treat the cause, which is the lack of rain and growing fuel loads. So, you know, forest management, we have that here as well. In Alberta, the government is focused on addressing the causes.
Thank you very much, Minister. Member Ellison, you have 7.5 minutes to.
Thank you, Mr. Chair. Minister, it's a rapid fire round. So hopefully these come out coherent. Hopefully these come out coherently. And so this is a question, I'm going to pick up on questions from energy, from the energy file. Whether or not there is any risk or liability to the government from wells or other oil and gas facilities that would be transferred to the Oil Well Association for remediation, and they won't have the funds. So we've heard in the House, no money will go to the private sector, but maybe if the company has gone bankrupt, the money's not going to the private sector. Just examples of 3 companies: 2,500 wells from Sequoia, 5,600 wells from Long Run, 2,000 wells from Alpha Bow. Is there any risk or liability to the government?
Well, we'll continue to, you know, meet our obligations, meet our requirements that exist. I'm well aware a lot of that's from my riding. And so there is mechanisms in place now. I believe it's through environment, actually. I don't have the right thing. I think it's Section 36 payments or something.
My other oil and gas question is the payment of property taxes to municipalities. And, you know, if the government could be a little bit more heavy-handed there.
Surface rate.
So we think that the rural municipalities are saying that it's about $254 million that they did not collect last year from property taxes from oil and gas. Just curious, you know, if that this also could lead to liabilities for the government, that those municipalities are going to come to the government for like funding for projects because they don't have the property tax revenue. Is that something that's been factored into the budget, that they might be asking for more money because they're not getting property tax revenue from oil and gas companies?
Not in the budget. We well understand the issue. You know, if the municipality's not getting paid generally neither is the landowner, like the companies that you've mentioned. It's usually that they're insolvent or about to be. But we monitor it closely, but no, there's no silver bullet answer in this budget.
I think we all wish that there was a silver bullet, but maybe if there was, it would be a silver bullet for everything, and we wouldn't have hard conversations with Albertans. I'm going to go to page 73 of the fiscal plan, where I see the budget estimate for physician compensation. We see that 25-26 is actually lower than the Q3 forecast. Just curious, if we're hoping to hire more doctors, how do we anticipate that physician compensation would be lower?
Well, we're working with the physicians to ensure that it's right size. There's a new physician deal, so a lot of these numbers came from the expectations of health, nurse practitioner program, some other changes, but yeah, using health's best estimation.
Yeah, we have heard that maybe there's like looking at some claim codes that are being deleted that will maybe take away some compensation for physicians. But now I'm actually going to ask the reverse question, have my cake and eat it too. On page 73, so we also see in the same chart that in 26, 27, and 27, 28, then it's actually going to like flip and increase. So why lower going into this budget year and then like a healthy increase the following budget year?
I think you'd say some structural changes in the short term and then volume increases from there is the expectation.
I feel like this year we're also having some volume increases.
What's that? I feel like this year we're also seeing some volume increases. Well, we would agree, but yeah, structural reset and then volume growth.
Okay. With respect to, I'll flip back to the contingency fund, and the part of that contingency fund this year, a big chunk of it, is those public sector compensation negotiations. But the contingency fund for 26, 27, and 27, 28 are also elevated. There's like a lot of those public sector compensations are going to be negotiated this year. So the deals would be kind of like made. Wouldn't they translate into operating expenses line items for the subsequent 2 years?
Yeah, so it's used to reference the growth which we expect will be there, but it'll be moved into ministerial line items most likely.
So maybe even like through the course of this year,
yeah,
the forecast for 26, 27 will change, and it'll move from contingency to a ministry line item.
Yes, that would be our expectation.
Okay, so we can look for those changes as we go along. So thanks for that. With the auto insurance, there's a couple of things that I've noted through the course of the conversation today, that in the structural change that we're making in the delivery of auto insurance, this does impact the cost to the government. So we've noticed that there's increases to financial sector regulation and policy. I think it was Member Dick that asked earlier about that $7 million increase. I had the same question. You've answered that a good chunk of it is coming for because of those auto insurance changes. We also know that there's like advertising and a campaign around that auto insurance. So I just want to acknowledge, like, overall this year, how much is it costing the government to make those structural changes in auto insurance?
The entire piece we talked about, the 8.4 million, I guess.
Including advertising and...
That's in there.
That's in there? 8.4 million?
In the 9, pardon me, not in the 8.4. That includes the 13 FTE. I would just note a lot of that's temporary. Like, this is for the stand-up, not the continual operations.
All right, I'll just say that I noticed, so really 45 seconds. Treasury Board Secretariat, page 178 of the business plan, had a really big jump. I was asking about that. I was going to ask about last year, earlier in this conversation, you listed off several advertising campaigns that were being covered off by other ministries. I would have been interested to hear what was the budget and how much has the spend already been on those advertising campaigns. I've been asked by those pension plans like LAPP whether or not they could have a board member on AIMCO because they feel like they would like to have some more like say at the table. I have a question to the minister around youth unemployment. Do we really think that a lower minimum wage is helping? Youth unemployment is actually going up. So suppressing minimum wage isn't really helping there.
Apologize for the
and I had
interruption.
one more.
But I must advise the committee that time allotted for this portion of consideration of the ministry estimates has concluded. I'd like to remind the committee members that we are scheduled to meet this evening in half an hour at 7 p.m. to consider the estimates of Minister of Affordability and Utilities. Thank you, everyone. This meeting's adjourned.